What's up? What's up? Sometimes they just don't make sense, and it's not our job to try to make sense out of them. Well, that was an interesting day with absolutely zero volume once again. Now hey, the guitar boy, how you doing? We don't typically talk. I know you're not doing great, so but I understand. I'm with you. Not that it makes you feel better, because misery does not love company. Okay, prior to common opinion, misery does not like company. But we don't normally talk volume here, but now we have to talk a little bit about it because it is pathetic. Okay, so what does it mean? What does the lack of volume mean? Well, on the surface, it doesn't mean anything. Okay, but underneath, there is some meaning. And again, I'm not going to predict anything. Okay, I got out of the predicting business a long time ago when I figured out that I could never predict, long enough, and for over a long haul, without I don't have to take any risk, I can predict great. Okay, but with real money at stake, it's very difficult and very challenging to try to, forecast the future. I mean, again, I stand by my 50 to 60% haircut. It could, but the question is, when's it going to happen? Okay. It looked like we're on the road down 20, and suddenly, bang, we're back up again, and we're back to some resistance. But the real concern for me, and what confirms for me that it's more likely to happen, is the overall lack of interest in the market right now. Okay. Nobody's paying attention and nobody's talking about it right now, but quietly, the 10-year notes are up about 2 3/8, almost 2 1/3. I'm gonna give you the exact quote right now in 1 second. Okay, the 10-year is 2.31 half. Okay, that if you remember, it was 3 1/2 not that long ago. Okay, I don't. I will remind myself, but. Yeah, you can shoot me a reminder just to make sure I did it. I got a couple things I got to close, but so nobody's talking about the 10-year notes exploding. Okay, now we're talking because we're short, the futures, which means we're basically long notes. But when you look at the viewpoint, and so is the money that has chased this market all the way up going to stay in this market? Laugh and the world cries, crying you. That's true. Crying you cry alone. And the question is, will the weak money, okay, that was forced into equities for all these years with a no interest rate market, stay there? And again, I'm not telling you they're going to get out tomorrow. Remember, I'm not going to predict anything other than what I can see. Okay, and other than what our positions are, and we're basically net long at the moment. Okay. So I can't basically say, well, I think we're going down tomorrow. I mean, but what I do see is that the lack of overall interest in the markets is a concern. Okay. I mean, it's not a concern. It will only benefit us in the long run, but in the short term, it's a pain in the ass. Okay. And it makes trading much more challenging. Okay. This is the time that you have to pull the reins in even a little tighter. Okay, it's 2.31 half, big boy. Oh, the 30-year. Well, that's another problem, right? So short term, the yield curve is flattening. Okay, which is, again, when short term rates are more expensive or equal to long term rates, that's not a very healthy sign either. And again, it doesn't matter today, because you can see that the markets came all the way back from being thrashed to suddenly, the S&P is up on the day. The NASDAQ is only on 25 ticks. It was down almost 200. Okay. Well, it's more flat than inverted, but when I talk about short-term rates, okay, it's not just the 10 and the 30. It starts at the T-bills, notes, bonds. Okay. And then you start to look farther down the curve, and you can see the curve is basically flat, which means you're paying the same amount of money whether you borrow for 2 years, you borrow for 30. Okay. So again, that's not typically a very healthy sign to the market. Now, again, does it matter? Not right now. Okay. Again, I'd give you all the reasons in the world that we should go a lot lower. But do any of them matter? The answer is no. Nothing matters. Okay. This is the point. Nothing matters except the price. Because had you have been shorting this market into the hole this morning, how would you be right now? Okay. You'd be wondering what the hell ran over you, because suddenly we are back towards the almost, the highs of the day, basically. Okay. So I think you have to, looks like capital over, you're way above my pay grade when you start talking of capital from EU to USA. You're well above my pay grade. Okay. That's too complex for me. Okay. I can only look at this. I can see there's a lack of interest in the market. There's a lack of volume. Okay. So we do know, one thing we do know for sure, right? That markets tend to drift higher, and the quieter, the more they're usually going to drift. Well, once again, not to be proven wrong. Okay, here it is once again. They were slow all day, and suddenly, now again, listen, the Dow's still down 150, but it's certainly better than down the 400 that it was. Okay, the S&P is up on the day, better than the 30 points it was down, and the Nasdaq is down 27, which is certainly better than 150 or 200. So when you look at it, you go, okay. And again, too many people want to try and predict what's next. Thank you, buddy. I appreciate it. Connie's not feeling well today. So, listen, I feel horrible because she worked so hard and she's got such a great business, and she's being hampered by this mother effing disease. And it's a killer. Because she's very active and she's an ass kicker too. So she's here. Sorry. Anyways, so you gotta be prepared, okay, for everything. And right now, what the preparation really is? Probably not pay too much attention. Probably walk away. You have your positions on if you have them on. If you're hedged, you're hedged. But I would not. I'm not. You're an ass kicker, yes, not a kisser, kicker. You're an ass kicker. You're the best, but not that you stop doing things. It's just, I think being active in this market is very tricky, and we got hammered this morning. Okay, being active. And again, we're trading what we're supposed to be trading, but I commented, and I will comment again now, that the overall activity is so quiet that maybe it's better not participating on a short term right now. Okay. Maybe it's better not to try to day trade the market right now at the moment. And I'm not saying it won't be, because I don't know. I don't know what tomorrow's going to bring. I don't know what the moment's going to bring. So we're going to get together like we do every day, at 9:30 or sooner, earlier. But I don't know. But if it's another day like it was today, early, I'm going to make the call early and pull the plug, because that's what I would do when I'm trading by myself. That's what I do. Okay, I make a decision pretty early because I can kind of have a feel, just like I can call when the pattern's going. I say, all right, that's it. I don't need to be involved because I've got positions on. I understand where I think the market's going, and I don't have to get actively involved in the overall market, because I think that's where we took good trades. Again, my concern with the trades, you are a compliment. It was a compliment to you, my love. You know how much I care for you. You've been taking notes from your 10 years now. Okay. I was going to come and see you one time. I just couldn't make it. Look, we made the right trades, but again, the overall picture was not a good picture. That's what I'm talking about. Again, you have to have, chess players think, great chess players think 10 moves ahead. Okay. The great traders think ahead to what can go wrong with it. I mentioned it, but I didn't, because everybody was with me, I did not exercise the proper judgment, which I would have done for myself. I was trying to make something happen when I should just kept my mouth shut and said, hey, I'll see you tomorrow. Okay. And we'll see what it looks like tomorrow. That's what I should have done. Okay. And I feel like a jackass for that. Okay. So, at the end of the day, I can tell you that, again, this quiet trade is scary only from the point that it means that there's not as much oomph or power behind it, which means it's probably going to have a pretty significant meltdown. The question will be when. And again, it wouldn't surprise me I can go back to every major collapse in history that I've been a part of. So going back to 87, and I can tell you, this is the type of action you saw leading up to it. Okay. In general, although we were reversed to long today, the markets are generally weaker. Okay. That's, 87 didn't just happen on that Monday. The markets were weaker for months going in, and they were really weak Wednesday, Thursday, and Friday of the week before. Okay. The collapse in 01, the NASDAQ was weak long before it really gave up the ghost. And the same thing goes for 08. We were weak long before the final bell was counted. Okay. So again, what I'm saying to you, what do you say, Joe? What I'm saying to you is that, look, I'm not going to predict it. I'm just saying that in trading, like in life, you have to make decisions based on the situations that you can assess. Okay. Now, you're not always going to be right. Okay. There's no way you're always going to be right. But if you can assess a situation based on your knowledge and based on your practice, then it makes it easier for you down the road, okay, to put yourself in a much better position in the future, okay? Because a lot of times, if you don't remember, the trades you don't make are great trades, okay, versus the trades that you do make. Because you don't have, when I tell you, and you've seen it happen, okay, when it's busy, there is nothing like it, okay? There is nothing like this business when there's action and it's busy and you make nothing but money. However, too many of us spend time trying to make a market busy that is not. Okay. Too many of us spend time trying to be active when active is not what is called for. Okay. And I go back to the same thing. Look, these are things we decide, and no trade is a trade. Making a decision not to make a trade is a trade. Okay. So, again, I look at this and I go, how the hell did we get here again when we had this, again, a dramatic recovery, either from the bottoms or from the day? I mean, again, look at what you had. Yeah, the market was down here, but basically, where was it? It was kind of like it kind of like came down to a support level based on our position. Okay. Now, again, am I 100% right? No, I'm never 100% right. I can only read what I can see. I can only assess what I can look at. And right now we have broken out from a consolidation pattern. Okay. And the trend has broken to the upside once again. Okay. That's easy to see. Okay. I mean, that is a pattern, and it's funny. Well, it's not funny. It's kind of sad, but Friday, everybody was emailing me and said, I hope we don't change. I hope we don't change. And at the end of the day, I go, don't you wish you would have changed? I mean, if you had a monster move. But again, it is what it is. Okay. This is the hardest part of being a trader or trading actively, okay, or being involved, is the misery that markets do create at times. And again, remember, all things that create big potential also create lots of grief. Okay. So if you keep that in mind, okay, which goes back to my original statement. Sometimes you make the decision to walk away, go to the golf course, go to the Rockies game, wherever you live, go somewhere, but nothing to see here. Okay. Nothing to watch here. And that's also like making a trade. Okay. You're not missing anything. If you make the decision, then you're not missing anything. Don't put yourself in a position of trying to force something that is not there. Okay. So as we look at the markets, the bonds got absolutely blistered today. Okay. Not a surprise. I mean, again, interest rates are going up. They told us that last week. Okay. They told us that there could be as many as 7 rate hikes. Now, again, the Fed really is stupid, and they're not going to do anything really. That was just more lip service. However, the bond market, the bond traders, they're pretty smart. Okay. That is the fixed income market is the biggest market in the world by at least 10 to 20 times. Okay. And they're pretty sharp. Okay. And they're telling you that rates are going up. And if you've looked at a mortgage lately, okay, I can't believe what I have to pay for a mortgage right now. I'm about ready to slip my wrist. Okay. Now, I don't need a mortgage for myself, but I'm getting one for my son, and we both have close to 800 credit scores. Okay, and of course, what do you think the rates are? I know I asked Saturday, but there's new people here. What do you think the rates are right now with perfect credit, no debt? Okay, what do you think the interest rate is for a 30-year mortgage right now? Okay, about give me a heart attack. Yeah, dream on, brother. 3%. You can dream and keep dreaming. You can't get a 15 for 3. Okay. Keep going. You get it. I'm going to 50. Of course I'm going to 50. Right. It's free. He's buying it. It's going to be his house. I'm going to subsidize him in the beginning. Okay. But he'll be under mortgage. Okay. And I've obviously got to sign for it. But I mean, he will. I get a 15. I mean, I wouldn't get one at all. But well, you're close. It's 4.5% for a 30-year right now. Okay. And I priced it with a lot of different people, and that was the best I could find. Okay. Well, what does that tell you? Mortgage rates are going up. Okay. What does that tell us? Housing prices are probably coming down. Okay. I'm the only guy who's going to end up losing $400,000 on a house I sold and paying sticker price for a house I bought. And you have to know that'll probably kill me more than anything else. That simple fact that I didn't get a bargain on the house I bought, and I had to take a big loss on the house I sold. Okay, but again, it is what it is. What am I going to do? Okay, and if I really told you the effective loss on the house, you would cry. You would cry. You wouldn't even cry for me. Even if you hate me, you'd still cry for me. If I gave you the true effective loss on the house, because how I had to finance the addition back when I did it. Okay, yeah, I got lots of bucks. I got a lot less now. Right. It's in the same texture. Yeah. Okay. Well, hopefully I'm not, I said this to my mom the other day. Houses are not what they were, I don't know, 50 years ago, 100 years, whatever it was. Again, time goes by so fast. But in my eye, listen, don't get me wrong. I think you should own a house if you can, because why pay rent to somebody else? But houses are bottomless pits of capital anyways. I mean, you spend no matter what. That's something's always, when you own a house, which is why I only like to buy new if I can, right? Because I get 10 years of nothing. Okay. An old house, like my house isn't that old. I mean, we gutted it when I bought it for my mom. I gutted this house 12 years ago. Okay. And added on because obviously it was made for 2 and I had to make it for 4. Okay. So I basically sold it for what I paid her for it. Okay. And I lost the entire addition that I put onto it. Okay. But again, it's a bottomless pit of spending. And I don't think it's the same value that we once put on it and generations ago, or again, even maybe when I bought my first house 45 years ago or 44 years ago, whatever it was. Okay. But in the meantime, it is what it was. Listen, you're right. You have something else. Well, again, my house is as good as it gets from being taken care of. But what does it mean? It doesn't mean anything. It doesn't mean something can't break down tomorrow. Okay. Again, nothing is for sure, right? I just bought, I mistakenly sent too many cars to Vegas. Okay. And I was short of cars. So I had to buy my wife a car to go back and forth to work. And I stole a Cadillac truck crossover. Best car I ever bought. I paid $5,500 for it, cash. Okay, best car I ever bought. Okay, I can't believe it. Anyways, back to the markets. Enough of my sob stories. Okay, so again, you're seeing action that we're seeing buyers show up, but who are the real buyers? And this goes back to the story. Okay, so the buyers, I personally believe, are still the retail buyer. Okay. I think this is the people that are finally getting in after all those years of not getting in, and they're trying to buy this dip. Okay. And I think very much similar to the bond vigilantes that we talked about way back here. Okay. Again, I'm going to give you a comparison. Okay. But we talked about the bond vigilantes way back. Oh, I can't even see. Okay. There we go. Okay, we talked about that when bonds were going straight up, and we said that the professionals, the real bond traders, are just waiting to hammer them, and they're letting retail have a field day right now. And look what happened. Okay, bang, you got a huge knockdown, and I don't think we're done yet. If you look at this in pure dollars and cents, so you can relate to it better. Okay, if you were short one bond contract, okay, from the top, okay, to now, that's about $10,000 on one contract. Okay, so this thing, put it in perspective, okay, of how far it's fallen. Okay, so when I look at it, I go, okay. I mean, and so I look at the stock market as very much the same animal right now, because, you know, again, there's no logic behind it, but the true storyteller is the falling volume almost daily. Okay, and especially when you put in a triple witching cycle in this, okay, on Friday, right? That was a triple witching expiration. Now, I'm sure the Dow Jones averages had high volume, okay, by themselves. Let me just check to make sure I pour out my mouth. But I'm sure that they had heavy volume. Okay, but let me see to make sure. Yeah, they still had a little bit of spike, but the futures had no action, which is a bigger sign. You know, the Dow Jones Industrial Average is strictly, it's almost like the New York Stock Exchange. It's more of a symbol than it means anything anymore. Okay, the S&P 500 is what everybody benchmarks against. Okay, so, you know, I look at the volumes and triple witching expiration, zero volume in the S&P, zero volume in the Dow, zero volume in the Nasdaq, and zero volume in the Russell. Well, that kind of says there wasn't much going on. Okay, and if you look at the option market, okay, you know, you see the VIX, which is not doing a heck of a lot either, and coming back down after trending up nicely. What has it done? It's turned around and it's now coming back down to a support level. Okay, so again, looking at the overall picture, I got to wonder, okay, you know, where we're headed. Now, again, I'm not going to predict it. I'm going to continue to do what I always do, which is follow my positions through my algorithms. But I know that we're moments away, and moments could be days, weeks, or months from a trend that's going to continue and to continue lower. In the meantime, this consolidation crap is a killer, because it basically, what it does, it winds back and forth into ranges that eventually do nothing. Okay, they force you in and then they force you out. Okay, because of course, based on our design, you know, we don't act too fast, but we do get pulled up on any big move, and of course then it reverses back out. And that's always the challenge, okay, of a market. And again, if you look at this in general, let's go back and look at how long it's consolidated, and then after the initial break, how long it consolidated before. Okay, that is as miserable as it gets from a trading standpoint. Okay, consolidation is the worst pattern, which is why it's called the greatest time of uncertainty. Thanks, Rory. I'm gonna watch you since the first of the year. I'm trimming my positions overall by 50% cash. Good. I don't go to cash, but you know, I go to I hedge everything, so it's all good. Everybody's waiting for the dip. Again, look, I'm not telling you to do anything. I'm saying to you that being active in this market is not very healthy. Okay, and that includes anything, whatever you're doing. Okay, because even if you're right in a short term, you're probably not going to be right. Okay, so can you take the pressure of not being right? And how many times are you willing to reload to make that trade? Okay, that's number one. Number two, okay, we don't predict. So again, for now, I assume we go higher, but I won't be surprised if it turns lower. Okay, and I think that this is what you just have to focus on as you watch. And I think the greatest thing you can do for yourselves is when there is not much market activity. Sometimes it's best just to walk away. You got positions on, fine. You're hedged, fine. You got the portfolios on, fine. But as far as trying to be overly active, you can only get yourself into trouble, okay, by being active. This is not a market that wants activity. This is a market for very passive investing, okay, or trading, but not short-term trading, because you're not getting enough action in any time frame to make it worth the risk that you have to take. Remember, everything you do takes risk. Okay. So if you're going to put yourself at risk, okay, don't you want to have a better shot to at least get paid if you're right? Okay. Versus get slammed if you're wrong and make a little bit if you're right. Right now, you're in a market that will reward you small and torment you or torture you bigger. Is that the position that you want to be in? I don't think so. Okay. I think you want to be in a market that gives you, you may have to take a little bit more risk, but gives you the opportunity for gigantic gains to go along with the risk that you're taking. And I don't think that if you want to call it risk reward or that ratio, works out right now. Okay. That's what I see. I don't think that is the shape that the market is in today. I think the market is extremely quiet and waiting. Okay. And I guess Andy must be, maybe his plane's late. I don't know. I know he's out of town. I don't see him yet, so I'll just continue on. He'll catch up when he gets here. But you look at what's going on in the world. Okay. I mean, you look at the price of oil. You look at what's going on in the Middle East. You look at Middle East, I'm sorry, Russia. Okay, soon to be in the Middle East, because watch, what's known as the breadbasket, the Middle East, Egypt, and those countries. Russia is a third of the wheat supply. Okay, and people are going to go hungry. Okay, there's going to be not enough food. Have you noticed in your local grocery stores, the shelves are emptying? Okay, have you paid attention? Okay, a couple of weeks ago I showed those pictures. They're worse now. Okay, so people are going to go hungry. Okay, there's no, one thing about food, there's no replacement for food. We don't have solar food, or we can't eat in the metaverse. Okay, so what are you going to do when there's no wheat and no corn and no soybeans and you can't produce? Okay, then what are you going to do? What are you going to sub for then? Okay, and I think we tend to be too lackadaisical on our views of what is happening around us. But again, if you've been to the grocery store, I'm worried about the world right now. Watch out for false flag operations, clandestinely organized. I'm sure. Okay. Again, I think you have to understand, what is going on. And I think, unfortunately, Americans are very much fat and lazy, basically. They only care about, again, I go back to the statement, we only care about how much it costs by the month. Okay. Now, again, I don't normally go to the grocery store, but I am shocked when I go now. Okay. I am shocked at the lack of food. I don't think we've seen the hoarders show up yet, buying all the canned goods, the stuff that has a shelf life that's much longer. Okay. I think that's something that, you can watch, and that might be the end of it when they finally come in, but usually they're the first to be grabbing everything. Okay. But as I've told you, there is no supply. Okay. You can't, there's a lot of things we can't even get anymore. And the continuation of the weakening, supply chain and the food chain, okay, is going to be pretty disastrous when you think about it. Okay. If the market takes a 25 to 50% haircut, what does that mean for Bitcoin? Well, right now, it doesn't mean anything for Bitcoin right now, because Bitcoin's kind of stuck in a malaise. Look, if a Bitcoin answer is very simple. You've got every central bank around the world trying to figure out how to stop it. Okay. And they're not going to be able to stop it. Okay. Bitcoin is one announcement away from exploding. Okay. To the upside. I mean, listen, I'm a believer. I'm not telling anybody to jump out and run out and buy it right now and buy tons of it. I'm telling you that I'm a believer. Okay. I'm telling you that I think it's real. I think it's for sure, the currency of the youth and the libertarians. Okay. Because obviously the young, they understand it. They understand all that technology crap. Okay. And the libertarians, they understand that they don't want their money being manipulated by a government or by a central bank. Okay. So, well, what government will nationalize Bitcoin? Well, it's already nationalized in, I think, what, Nicaragua? Okay. So again, and Tradier, our preferred equity and options broker, okay, they're going to start carrying very shortly cryptocurrencies as part of their platform. Okay. And you will be able to use that, trade it through them without having to go through the fancy wallet. And that money will be usable like as margin money. Okay. So, again, they're telling the El Salvador, thank you. Okay. What if government bring in their own, but they're going to bring in digital currency. This is the scariest thing in the world. Okay. The scariest thing I can think of right now, besides what's going on, is the government's. I predicted that by 2023 or 24, we would see a digital currency that might be a global currency. Okay. Well, I think it's going to be sooner than that. And to me, the moment they digitize your dollars, all of your freedoms will be then stripped away. Okay. The minute they digitize currency, your freedom is gone, because they will know what you did from the moment you awoke to the time you were born to the time you died. Okay. They will be able to track every movement you make. You want to go do something in cash? You can't anymore. You want to go do something you're not supposed to be doing? You can't, unless you're not afraid to get caught. Okay. So, to me, this is one of the biggest problems that we have, is government taking away freedom, especially in the United States of America. Okay. Because we are a free nation, or were. Okay. But every day we give away more. Every day they take from us another little piece of your freedom. Okay. And if you think I'm wrong, you certainly are welcome to exercise your opinion, but I don't think I'm wrong. I think I'm spot on, because they continue to dig in to things that aren't any of their damn business. Okay. And yet they continue to spend our money, and they continue to create this ridiculous inflation, which is really just another tax, right? This is we went to war in 76. We went to war over less. Okay. Taxation without representation. Okay. I know my colonel's here. What do you think, Colonel? Privately. I know you always speak to me privately. Okay. With you, Bob, you're screwed with me. Oh, you're with me. You agree with me. Okay. So I'm not sure what you mean sometimes, but again, my point is that things are, I try to look at things logically, and I know the markets are not logical, right? We know that always, right? If you remember the genius, John Maynard Keynes, the markets remain illogical longer than you and I can remain solvent. Okay. So we know that the markets are never logical. Okay. But overall, we would hope that government was logical, but they're not logical either. They're logical at how to steal from their citizens to continue to spend ridiculous money. And that's not just here. That's it. How do you think many of these countries get into the mess that they're in? Okay. Is letting the central banking system take off. Okay. There was a lot of debate in 1913 about the central banking system. And, as obviously it wasn't there, but, and Americans were conned into the Federal Reserve System. Okay. Because it assured us that there would never be any more market meltdowns or market crashes. Well, that was wrong. Okay. And it assured us of always liquidity. That was wrong. Okay. But it didn't tell us is that you'll continue to strip your currency, your dollars of worth, of value. Okay. That they never told us. Okay. But if you read The Creature from Jekyll Island, again, it depends on how you believe. Okay. But I happen to lean, as I told you, down the middle. I'm a libertarian at heart. I don't believe social issues should be part of any election. I think that they should be fiscal issues, and you can have some differences there. But, again, I don't think that there should be other things involved. But, again, I don't run the country. I'm just a citizen here. Okay. That hopes for a better world for everybody, but especially for my kids and my grandchildren, which I don't have yet. Okay. There he goes. Yes, I also hedged them at a point because okay. All right. What are my thoughts about the country though? I'm really curious to get your opinion. I won't speak it. I'm just curious. Okay. You don't get to talk to you often, but I'm interested because you and I don't agree 100% on anything. Basically, we agree on a lot, but we have some differences as well. I would love to get your views there because you are a colonel after all. Okay. You are a colonel, so I do give you the highest amount of respect, as you know. Okay. I'm sure that everyone's taken a new house payment over the last 2 years. Did we budgeting for $6 gasoline and 50% in their utility? I know, and I'm sure you're right. I'm sure nobody budgeted for that. I mean, I've seen gas as high as $8 in California. That's not every gas station. Okay. Well, we have to start. See, here's in my opinion. Okay, in my opinion, here is the big issue. Okay, if you suffer pain immediately, then it goes away faster. It's like ripping the Band-Aid off. But unfortunately, the Keynesian way and the Federal Reserve way is not to rip the Band-Aid off right away. The Federal Reserve way is to torture us and then tell us 10 years later we were in a recession, when I say that we're in a recession right now. Okay. And you can agree with it or not. It doesn't matter whether you agree or not. That's what I think. And again, does it affect me personally? No. I mean, yeah, do I pay more? Yes. Am I paying more for others? Yeah. But again, it doesn't change my life. It didn't stop me anything that I do. I'm still going back and forth to Las Vegas. I'm still doing everything I always did. But it has a big effect on others that aren't quite so fortunate. Okay. That has a big effect on what's going to happen in the future. Okay. And that's where listen, I'm going to be dead before all this plays out the way I think it's going to play out. Okay. I'm 65 now. How much time I got? 20 years, 30 years? A lot of this won't play out until after that period. But again, I'm very concerned about the damage to future generations. I've told you that many, many times before. Okay. And I don't see at this moment, I don't see a way out. Okay. And that's even scarier. Okay. I mean, is there any reason for us to have given control to everybody but ourselves? Can anybody give me one logical reason why we don't control our own oil? Okay. Give me one reason why we don't control our own oil. Okay. All right. I agree with that. What's up, my brother?
Oh, sorry. I'm late.
That's all right. I figured you were running late. No worries.
A little craziness today, all over the place. I didn't even hear. What was the one reason? What?
I know. I said that we're talking about all this inflation, and I said that I'm not going to be around when it really hits the fan. But there's so many issues that everybody just ignores and kind of poo-poos. I said, why are we not? Give me one logical reason why we are not supplying our own oil in these market conditions.
Well, first of all, you will be around when it hits the fan because it's hitting the fan now. That's number one. And number two, because we're under a spell. It's almost a religious fervor that about this environmental stuff, and they have it all wrong. It's a religious fervor.
Okay, so why and why are we so passive about it? Thank you, Bruce. When we shouldn't be. I mean, again, I'm going to go a step further. Okay, what has led to this, and why can't anybody see the big picture?
Well, I think the big picture is that the energy lit the fuse. And even if we start pumping, it's going to be a fuse that's very hard to put out at this point.
Well, that I don't disagree with that. And of course, one of the people I respect the most, okay, just told me that both Republicans and Democrats both suck. And I said, well, I agree. Okay. Look, I think both parties consistently have their hands in our pockets. Okay. And I don't like it. Okay. That I like less than anything. But I'm not.
The American public has to wake up and, elect different kinds of leaders here. I think, listen, this thing is spiraling really kind of out of control. I don't believe half of what I see in the press. but I know enough to know that this is a very ugly situation. And you know, energy started it. Energy could have avoided it. But
Right.
even if we start pumping again now, I think we're in a deep hole.
Well, don't you think the rest of the world needs it though still? And we need it for sure. I mean, don't you
Absolutely,
think?
but
I
it's
mean,
not
we
gonna
don't, we have, well, the biggest thing I see right now is we have no law and order in this country right now. Okay. We have lost a great deal of our power that we at one time had. Okay. Agree or disagree?
I agree.
Okay. And it's a scary thing. And, this is, again, I don't know why we're up for this great reset or whatever, which is global. I don't believe in globalism. Do you?
No.
Okay. And, listen,
I believe in coexisting. I believe coexisting is very important.
I
I
agree.
don't believe in globalism, and I don't believe in these big blocks where you have the US, Europe, Australia, Canada, a couple of other countries, Japan on one side, and you have Russia, China, North Korea, Iran, a couple other countries on the other side. No, I think that's very dangerous.
Okay. So do you have any bitches today, sir? Well, do you want to pick one?
Just in general.
I mean, I know you're happy because you just came back from Indiana, but do you have anything you'd like to?
Well, I just, I'm just, I'm flabbergasted by the state of the world. I did not believe, I mean, maybe I'm foolish. I did not believe I'd see this in my lifetime. I really didn't. I really didn't think that I'd see it. I cannot believe that one administration can do so much damage. And I'm sorry if it's political, but I cannot believe that one administration can do so much damage in such a short time that, listen, a lot of this stuff has been building for a long time, but, diplomacy is important and, compromise is important on the world stage. And I just don't see us at a point where there's any even attempt here. And it's listen, I'm no fan of Putin. He's a killer and he's a dangerous character, but we've allowed this to get this far. I mean, we really have.
Well, that goes back to what I look again.
Goes back many administrations.
Right. We've all been continuing to get weaker. And the one guy who did stand up, okay, Trump, okay,
They destroyed him.
You didn't have to like him, whatever. I'm just saying that he had law and order and the country was safer, in my opinion. Okay. And now we're in jeopardy of losing a lot. And it's a very scary time because of what's going on.
It's a very scary time.
Okay.
It's a very scary time.
That's my 2 cents. So any thoughts on these markets? Any thoughts on what's going on? I mean, obviously we reversed we're long again, which again, there's virtually no volume, which is how I started off the call today.
Right.
It is a concern. We usually don't talk volume, but now it's becoming a fact that it virtually is non-existent.
No, it's a scary time, and we're going to have a lot of volatility, and we're going to swing from long to short and short to long, and that's just what the algorithms do in these wild markets. Eventually we'll catch big trends. There's no question about it. And I would imagine, even though we're long, and you can smack me for saying it, that eventually we'll catch a big trend. I'll be on the downside.
I agree. Listen, I've said that all along. I agree.
That's my view.
That's what I think. Look.
Yeah, that's what my gut tells me. Do I think oil is going to go to $200 a barrel? And I think that the oil is not the big problem. I think the big problem is wheat. I really do. I think wheat is a much, much, much more severe problem that's going to cause famine.
Right, because you can't replace it, and you can't make it out of nothing. Right. And if you don't have a third of the world's supply, it's a much bigger problem. Okay, because people are going hungry. That's why I said. I also said it before you got here.
Yeah.
I mean, I think that's the problem. Okay.
Yeah, that's a big problem. And, here in the United States, we got to get back to this. We got to get back to making stuff that we need and worrying about us. That's what we got to do at this point. Not that we have to go isolationist, but we have to supply the drugs, the food, the energy that we need. That we need.
Right. I couldn't agree more. And I think that, you know,
And I think that how this plays out, I really think how this plays out. You know who Henry Clay was?
yeah,
He was the great compromiser, right?
Yeah.
I think that's the way this thing plays out. I think that you get another Yalta, you get another great compromise where the China, US, Russia carve up the world. I really do. And I think that they redraw the lines. And I think that the answer has got to be like a giant demilitarized zone from Germany to the Russian border. And that's where we're headed on that side. And I think that China, you know, listen, right now, China's gonna go into Taiwan. No choice about that.
I said that last week. There's no question about it. They're going in there. I mean,
Let me ask you, would you trade Taiwan for them, a package deal? You got to take North Korea too, and you got to control that.
yeah.
Right. I think that's part of it too.
I mean, you know, again, I don't think that this administration doesn't do anything. That's the sad part about it all. I mean, you know, they cluster Afghanistan. Okay. They screwed up everything else. And so far, everything they touch, you know, you've heard the Midas touch.
Yeah, he's
They
got
got the opposite of the Midas touch.
He's opposite George. Every impulse he has, he should go opposite.
Actually, I don't think it's his impulse. I mean, look, I never liked him even before this. He was always a criminal, in my opinion. Again, I'm not getting the political. I'm telling you my actual opinion. Long before he was ever elected president. Okay, but he's not controlling this. There are party. He's got ventriloquist speaking for him.
Yeah.
Okay.
Yeah, and who is that?
Well, it's more the progressives than anybody else. Okay, they're controlling more of this narrative. There's no way that a moderate Democrat is supporting this type of action right now.
Every time I see them say that this is the perfect way that we're going to go into alternative energy, I want to throw up.
Yep.
It's ridiculous. It shows no understanding. I don't think they even understand the energy business.
No, they don't.
And I don't think they understand science.
You know what they understand, Andy? They understand lobbyists. They understand how to get money for themselves. They understand how to take raises and screw the American public. That's what they understand. Okay, that's what they understand.
I think that they are more communist than China and Russia. China and Russia are authoritarian. China's capitalist. Russia, that's a dictatorship, but it's got a real capitalist element to it. You know, they're acting like capitalists. There's no question. So where are the real communists today? They're in this country.
Right. I don't disagree with that. Somebody asked a question about wheat, which I know you trade. Okay, WEAT, the ETF.
Mm-hmm.
I mean, I don't think it tracks it as perfectly, but it certainly.
No, it doesn't. It doesn't track it perfectly because the way it's structured is it's 3 actively traded CBOT wheat contracts. So it tends to underperform on the upside, tends to outperform on the downside. It always had some roll risk, but now the roll risk actually works for it because wheat is in backwardation. So when they roll, they pick up.
Right.
You know, so I like it. It's a little calmer. You know, listen, for someone who doesn't want to go into the futures, there's no other game in town.
Right.
So
I mean, look, I don't like these because, again, this goes back to when we talk about Bido later. I don't like them because I don't like the way that they price out things. But again, is it something to get substitute? Yeah, I suppose.
Yeah,
but how much?
It's done okay. You know, it doesn't count.
I mean, I'd rather buy the mini wheat future than.
Yeah, I agree. I mean, there's nothing like.
I know you do. I'm just saying that.
Listen,
I'm answering the question.
You always want to trade the futures because the futures are the closest to the physical because the futures that have the delivery mechanism have to converge.
Right.
So that's pure. Everything else is a derivative.
Correct. I agree.
And everything else can go to hell in a handbasket. They could change the rules, just like you know, VXX and all these things. They could change all the rules.
Right. And listen, I've done it to farmers already, and I'm betting. When we get the corn, I'll tell you what I'm going to bet on. But anyway.
But the other thing is, you know, they could change the rules with anything of these market products, and we're going to see more and more of that. Look, you always talk about the USO. And the USO is the perfect example of an ETF that doesn't work. It might track it on a short-term basis, but it's terrible. The only ETF that's really worked has been gold, because gold is more like a currency.
Right. I agree. And well, and the main ETFs are fine. But again, when you start getting into these other products that don't understand the way the markets actually function, it becomes a much bigger problem. But
Right, I know. And also the exchanges could run into problems with hypervolatility. We see what's happened in nickel. And that's a story, that we have to factor into our, trading and investing kind of calculus when we approach these markets, that when things get really crazy, even the stuff that reflects the physical can go crazy. That's why, what do we buy, Bubba, when we want to really invest in gold? What do you and I buy?
I buy physical gold. I buy it all the time.
Right. If you really want to be long nickel, you got to buy nickel.
I'm moving now. I got a hernia trying to pick it up. I got to move. I'm moving houses. So.
The point is, if you really want the exposure, you got to have the commodity. That's really the critical thing. So we try to go, it's a pyramid. At the bottom of the pyramid is the stuff that's in the biggest jeopardy. At the top is the physical. You want to go as close to the top as possible because that's going to do the best job.
Right.
Now, in the pyramid on wheat, the wheat ETF, other than the futures, is the only game in town. So, listen, it's been attracting a lot of volume. By the way, it's very expensive to trade. The expense ratio on it is very high. It's 3 wheat contracts, and we all know that the nearby experiences all the volatility, and the deferred contracts don't experience the same volatility.
Right.
So that's why you're getting that kind of reaction.
Delivery cycle always creates the biggest, because that's the stuff that's got to be. That's why crude went negative 2 years ago.
Right. When there's a shortage or a glut, it's going to be in the nearby.
Right. Anyway,
and the markets assume that they're self-correcting, that when a price goes to negative whatever, production's going to go down and the price will go back up.
Remind me about
will drop. And when prices go to stupid levels like wheat, people assume there'll be more the market structure is that war will be produced and inventories will start to rise and prices will come down. But, that's great in the theory world, in the world of the Fed, in the world of the economists at the universities. But when you factor in the variable of geopolitics, it throws all of this crap out.
But what about when you factor in another problem, which is weather right now? Okay.
Right. Weather's a problem. Fertilizers are a problem. There's a lot of other problems here that are not part of the normal pricing cycle. The thing that you have to remember is that all of these, when we look at the past, everything is we assume that the past, that it was normal, and we're not in a normal time. So we have to adjust ourselves to realize that we're not in normal times. We have to expect the unexpected, or you're going to be very surprised at what you're going to see.
I will close this in saying this: food is planted annually. Okay, there's no guarantee that it's going to grow the way it needs to and produce, versus oil, which in this country right now we have about a 200-year supply of oil without digging for it that deeply. Okay, plus what you've got around the world. So there's plenty of oil, but there is not plenty of food, and food is dependent year to year. Okay, and when you knock out 30% of the supply, potentially, you got a real big problem.
Right. And can I layer something on top of that?
Yes, you can.
You have a US dollar futures chart up there now, right?
I'm going to go through it. Yes.
Right. I just want to talk about this in broad strokes. So the US dollar index has been trending higher. This, folks, is a mirage. It's a total mirage because it measures the dollar against the euro, and the euro is on the border of this war. So this is BS. What's more important about the dollar is that the Saudis are going to sell China crude oil, and they're going to pay them in yuan. And the Nigerians are already taking Chinese currency for their oil. And what does that do? That knocks the dollar down as a reserve currency. When the dollar gets knocked down as a reserve currency, the bottom line is, aside from a lot of other things, all commodity prices will go higher, a lot higher. And the base prices will be a lot higher because the dollar has been the stability. And that old thing that, dollar down, commodities up, dollar up, commodities down. That's not going to work so well anymore, because when we look at the dollar index, the dollar index is like it's hypothetical. It doesn't count if the dollar is not the reserve currency.
Right.
And it's moving away from that. And that's one of the end results of this global block.
The fiat currency system is a joke. It's a bunch of criminals stealing your money underneath the surface. In the meantime, as he said, the dollar, you got 98 support, Kenny. And I mean, 99.50 should be resistance. We're still long. I'm telling you, I believe it's going through par. Okay.
Yeah, but that's only because you think that euro is crap.
Right. As worthless as the dollar is right now, I think it's going through par. Look, we are still the reserve currency for the moment. Okay. And I do think that, again, any trouble will create a rally here. And I think we're going back into that 104, 105 range. Okay. But right now we're long 98 to 99.50. But I could see par coming.
So do me a favor, define trouble.
Oh, I don't have enough time.
Well, just give me 2 examples of trouble.
$200 oil, a big battle in Russia, no supply, no delivery of wheat, no delivery of the components.
Well, I would say that the 2 things are, I agree with one of them, and I agree with all of it, but I think big trouble for when it comes to the dollar, the thing that'll make it spike higher will be big trouble in Ukraine and Russia and
the market.
And Taiwan.
The market, the dollar is still the number one fear asset for major countries to go to.
It is, because the index is against the euro and the yen.
Right.
And those are the 2 currencies that are going to suffer the most.
Correct. I agree. Anyways, Kenny, 98 to 99.50. And of course, the euro, which we reversed today, which God help us. Okay. I still say the euro's going below par, which I think is going back to 88 cents. But at the moment, we're long it. And, right now, I would suspect that 110 would be the support level, which was our resistance before. And you're probably looking at maybe, 111 and a half. Again, the ranges have got to be wider because of the thinness of the market. The thinner markets get, the faster that they can move on lesser volume. Okay. Because when sellers or buyers step out of the way and there's a chase on, suddenly the prices magnify. Okay. And the Bitcoin, which somebody asked earlier, look, we're dead in the middle, we're dead center, and there's a huge move coming here. Okay? It could be either way. I mean, I think, and I agree that it's probably going to be up. It's certainly up nicely off of the bottom, but again, it's really gone nowhere. And you have the central banks around the globe trying to figure out ways to stop it. Okay. What do you think, sir?
Yeah, listen, Friday, Chanos came out. He said he's short Coinbase. He doesn't like the earnings. I think, listen, just like we always look at the Bitcoin soup, I think that this is such a new asset class that the other products in the soup affect, the meat, which is the Bitcoin and the Ethereum, as much as they affect those things. So I think that that's kind of weighing on that here. And whether Chanos is right or wrong, I think these things will go higher eventually, that this is, that this geopolitical situation does nothing but supports these things. But, right now, can I see another push lower? Of course I could. I mean, this is very volatile, Bubba. Would you be shocked if you saw this thing put up a 30,000 print? No. Would you be shocked if you saw it put up a 60,000 print? No. But that's kind of how I look at it. 30,000, 60,000.
Anyway, what I'm saying is I think the next big move is higher.
Right. Exactly. And I'm 10 down, 20 up.
Right. I agree. And Chanos, just to make a comment, people talk about Chanos all the time. Look, he's a brilliant guy. He's very smart. Yeah. He's done very well. However, he isn't always right either. He's had plenty of beatdowns. And remember, he's only a partial investor in his fund. It's not necessarily his money, the same as Bill Ackman.
And let me say another thing there.
Go.
And we always talk about this, okay?
Mm-hmm.
We talk about the Hall of Fame, right? In Cooperstown, New York. and how the batters that get in. What's the average batting average in there? About 300?
Probably, yeah, maybe less.
Okay, so the Chanos is this. Well, they're the same way. They take a lot of swings, these guys,
Right.
and they miss a lot. And you know what? So they get high profile and they use the media. They hype up their risk positions and all that kind of stuff. They don't get it right all the time. Look at all the people who shorted Tesla and got blown away.
Right.
You know? I'm sure
I'm
there
one
was
of
a
them.
time where Chanos was short Tesla.
Yeah, I was one of them. I was right with them.
No, I'm not talking about you. I'm just
I'm
saying,
kidding,
you know,
but I mean,
that's why you got to ignore this kind of stuff.
right. It's
But I do think it affected the market
oh, I agree. I agree.
because there's sheep out there. The sheep.
Naturally, they're going to follow the bond markets. Oh, let me give you some levels, Ken. I didn't give you levels. Listen, really, it's still 38 to 44, but in the very near term here, it's like 41 to 42, which is very tight. Okay.
It has been like it's becoming like a tightly coiled spring. And if you remember, we were saying that about gold before it popped to a new high.
Indeed.
Looks the same.
Now, here's one that we have absolutely dead nailed. And again, I showed you this earlier, and I still compare this to the stock market. Okay. And Andy said, what's your number? 136?
136.16. And I'm not right until it gets there, but I think it's
No. But I mean, we both said when it spiked up that this was ridiculous. And
selling opportunity.
Even though we
said that.
Even though we were long at the time, we felt that it was in a collapse, and it was on very light and very little trade. And certainly we have seen the collapse, which is telling you that interest rates are going higher, whether you want to believe the Fed or not, because I don't. And you can see this collapse. Will we get a pop here? Probably. Okay. But overall, we're short, and I can see 152. I'd probably, as they used to say on the trading floor, I would sell until my hands bleed. Okay. Uh-huh. And I got no appetite to buy it except maybe on a trade, for a trade for a couple of minutes.
And Bubba, you and I both know from 4 decades in these markets that in bonds, like in a lot of markets, like big figures, 150, 160, 2000,
right.
Oil 100, big figures are big.
Right.
They're big. And the fact that we broke below 150 today is big.
Right.
That's big.
I mean, we could get.
Look at the action here. It's disgusting. Put up a little longer. Go back a little longer. Go back to like August of 2020. I mean, that says it all. It's this thing is this is in a bear market.
No, this is bear market. And again, I expect the same in the equity markets. That when it's ready and it's time, I expect the same kind of action because again, to me, you're seeing an equity, you're seeing retail trade. In the meantime. No buy, 152 sale. Okay. Gold, which we are, of course, we're short now. Okay. But
you know what I was thinking of? Given that everything goes wrong for this administration, the big yak in the stock market will probably come a month before the midterm elections.
Probably.
Right. Because this is just the way, this is the way they are. This is the way this has gone for them.
And that would be right with timing for history. That's usually about the time, the beginning of the fourth quarter.
Right.
So gold, we're short. Now, again, do I like it necessarily as a short? I don't love it as a short, but I don't hate it either because I know that I'll reverse it. I know that I'm buying physical anyways. We're kind of stuck in a tight little range. I think it's still 1900 to 1950.
Yeah, well, Bubba, you said it when we were going up. You said, well, you said, 1900 will be the new pivot point. And it seems like it is.
Yeah, I mean, so I think we'll get attracted back down there, and we'll see. Look, again, it's really going nowhere. That the key is it's going nowhere, but it's getting there in a hurry. Okay, and from 1900 to 1950 would be the levels I'm watching. Again, it's getting in a very narrow range, which indicates a bigger move is coming. And if I look at this chart, I would say that my first thought is the bigger move first is coming down to 1900 before it goes higher. Okay, now am I right? I don't know. Again, I can only read the information in front of me. I don't know what it's going to print here going forward, but I can read this and I can read this and I can read where we stand. So to me, all signs point to lower pricing for now.
And we also know that the algorithm tends to be right more than it's wrong. And it's pointing that way right now.
And am I selling my physical gold? No, I'm not. I'm buying more. Okay.
Right. Likewise.
Right. No, I know. And so 1950, the same goes for silver. Is silver in that same pattern? I mean, silver still looks a little bit better than everything else, but it really has been an awful trade. How many years now? 2 or 3?
Well, it got up to $30 in February 2021.
Right. I mean, it's been a pretty crappy trade because it hasn't been able to really have wider ranges. The ranges keep getting
Right.
narrower and narrower, right?
Yeah, yeah. It went from, like under $12 up to $30 from April 2020 through February 2021, and now we're basically in nowhere's land.
I think 24.50 is the first stop, and then possibly 24. I think the resistance is probably around 26. Now, again, could it change? Sure, it could. It's in it. Listen, remember these patterns that develop that get very tight and coiled have big moves that come out of it, and it could be. We don't know which way the move is going to be. I'm basing it only on what I can see in front of me, and I could, if I want, I could make a case for either side, which I choose to make a case for neither.
I've seen a lot of you know what the only reason, I mean, I'm pretty bullish on precious metals
Right.
overall, but
As am I.
the one thing that makes me a little bearish on silver is the rate of the silver commercials on TV has gone up, and that's usually counter.
You mean like when they opened up all the gold stores the first time gold went up, they're all out of business? Yeah, I know exactly what you're saying. Look, again, I can take any chart and make a case if I want to make a case for it. I don't want to make a case. I want to watch the action and follow along with what I'm supposed to be doing versus trying to, because I can tell you that here it's gone down, but if I go back here, I can say, oh, it's going up. So again, I'm not looking to convince you to do something. I'm telling you to learn to watch the market and trade it accordingly instead of grabbing some monster opinion because you heard something on TV or some jackass said something in the news that you tend to agree with, then all of a sudden made you bullish or bearish a product when that has nothing to do with anything.
And whenever you have that impulse, just look at the chart and look at the price action and make sure that the sentiment is telling you the same thing. If it isn't, you should take a step back and take a deep breath and pause.
Right. Anyways, Kenny, 24.50, 26 with an outside chance 24.
Right, because Bubba and I know, and we always tell you guys this, that sentiment is the most brilliant indicator.
That's true. It used to be the headlines in the USA Today, remember?
Yeah.
Anyways, platinum, look, it looks ugly. It fell hard. It looked like it was going up and it looked like it was going to be very nice and suddenly bang and back down to its normal. It actually got below 1,000 again. So here we are. It's like we don't trade it anymore because it's not liquid enough for us. But again, 1,000 to 1050, and then probably 1075 is resistance. Look, I'm not recommending you trade this. I am still a physical buyer of platinum. I'm still shopping on a 2-for-1 sale. I may go broke on my 2-for-1, but I keep buying because it's half of what it should be more than gold and it's less. So, but in the meantime, look, we don't trade anymore, but it certainly is bearish right now. And copper, okay, which we do trade, okay, and copper we are still short. And look, it came down to 450. It's back up. It was over $5 a couple weeks ago. I mean, we're in these terrible trading patterns for everything. These patterns aren't good for anything. Okay, these tight wound consolidation patterns are good for nobody, for nothing. Okay, that's what they're good.
But I will say, higher lows.
No, listen. I know you believe it's going. You said 680, I think, was your number.
Yeah, 680 is my target.
Okay, I see. I remember. Again, I don't doubt that. Like I said, I don't doubt anything. But again, I can make the case, where we are is short. Okay, or I could make the case for long, or I can make the case that it's going to make a big move out of this area here. Right. And we saw, and when it spiked over 5 one night, and suddenly that same day it was back down to 475 or 470.
Right.
This is when you have markets that have nothing to them, that are just gyrating around the mean, basically.
They get pushed around by dominant players.
Okay. And that becomes the issue as we watch it. In the meantime, 475 resistance, 450 support. Now here's an interesting one I want to talk about. Corn. The corn was up much higher, but look at the pattern. It's dead nuts consolidating, which is what we said and what we expected. Because why? Because the initial move up was far too fast. And if we go by our trend, it can consolidate for a little bit longer or come down a little bit and still be very bullish. Okay. You agree with that?
Yes. And you know what I think is the perfect example for the corn market, or is acting like the corn market? Is the cotton market acting very similar?
Right. Okay.
Right.
Now, this is what I want to bring up here. I'm gonna get your thoughts. So somebody sent me something today, okay, about some observations, and I go, look, in this market, there is no past. Okay, this is markets we've never seen before at these rates because of the geopolitical issues, because of things that are going on. We have not seen this ever in the history, and I can't look at anything as a normal or what it should be. I can only watch the overall price action, and this is telling me that this wants to go a lot higher, and I think there's room to go a lot higher. And I think you and I both agree that $10 is not out of the question.
Not at all, or higher. Look, the world has to eat, and not only does the world have to eat, but corn, unlike in decades past, is big energy now.
Right. And the term used was seasonal, and I go, there's no seasons right now.
No.
We don't know from seasonal in these markets.
Seasonal. Forget seasonal. Yes, seasons matter in commodities in normal years. This is not a normal time in history.
Right. Okay. In the meantime, it looks great. We're still long.
By the way, if you want to prove that to yourself, there's one commodity that proves it right now. Heating oil. I mean, we're coming to the time of the year where heating oil tends to be the weak link. And heating oil is zooming because Brent is the input, and because of this geopolitical stuff. Forget seasonality. It doesn't matter now.
And so, Kenny, 720 to 720 to 780. Okay.
By the way, Bubba, to add one thing to that.
Yeah, go ahead.
That seasonality might be seasonality's greatest foe here, because people who trade or invest based on seasonality are going to be running for the hills and exacerbating any moves.
Right. No, I agree with that 100%. And this is what creates it now. Soybeans. Look at how long they've been winding this coil for.
That's a beautiful consolidation.
And finally,
textbook.
They're meeting where I said it would meet. Okay. So what am I thinking? We're already long, but what am I thinking here? I think they take off from here. And I think that, as I think you and I have said week after week, when it comes out of teens, it's not going to be a 12. It's going to be a 20.
Yeah, 20 handle on that is definitely possible this year.
So, and again, it's going to mean everything is more expensive. And I think we've only begun here. And this is so bullish looking the way it's set up here, as it's meeting exactly, and it waited long enough without getting too far off the mean. Okay.
I tell you something, a quick story. It's kind of interesting.
Right.
Back in 2020, so I wrote this article that I basically said at the time, when everything looked terrible, I was like, this smells a lot like 2008. And if it's like 2008, all the commodities will take off. They'll make lows here and they'll take off. And the lows that they made were pretty ugly. I mean, particularly oil, the grain's a little not as drastic, but natural gas, oil, energy, they all made horrible. And I said, that if we mirror 2012, and this was just taking into account the pandemic at the time and inflation and the Fed and the stimulus, said if we mimic that, the highs are going to be like much higher than, and already we've seen that. But I didn't even consider this geopolitical crap.
Right. I agree.
So,
I remember the article. How about that?
Yeah.
So 1640, 17 bucks, 1720. But again, I don't think that the upside is going to hold. Now we're in a precarious position here because of the straight up move, and of course then the straight down move, which we are short. We're short right around here somewhere. Look, you had an almost limit up today. It failed up limit, but again, doesn't mean it won't be up limit tomorrow. This is a bouncing ball, which if I had my choice, I'd rather be long than short. Because
each week that this goes on in Ukraine, and this is directly related to Ukraine, each day that this goes on, wheat becomes more and more scarce because they're not going to be able to plant and harvest wheat there this year. No way. That's 2/3 of the world's wheat. You think that they're going to be shipping wheat out of the Black Sea ports this year? Come on.
Someone had to step out. My bet on corn was it's got a chance to see $10. Okay. And as I said on RFD TV, if you ever give up the upside of these commodities, you should be shot and taken out to the barn and given a good whipping, because you can hedge them without giving up the top side. And these things have potential to go much, much, much higher than here. In the meantime, wheat is kind of stuck between 10.50 and 11.50. Again, I would prefer, if it was my choice, to be long. I'm short at the moment, and we'll see what it looks like. But right now, it's really just stuck, again, 10.50 to 11.50. And of course, feeder cattle with higher.
Bubba, just to answer a question out there that someone's asking about a 2 or 3 ETFs for covering the commodities. I'm like Bubba. I like trading the individual markets. You get much better bang for the buck. I look for the ones, if someone asks me about the ETF, I look for the ones that are most liquid. So I look at the volume, I look at the market caps. The DBC is the biggest one. The GSG is okay, but I really prefer the individuals. I really do. You're going to get much more bang for your buck and much more liquidity in the future.
I don't think personally, I don't think you ever get the proper movement out of those.
Oh, I agree 100%.
I know you do.
And there's some people who live their life, they just want the ETFs,
No, I get it. But what I'm going to say is that now with the micro futures and the mini futures, they're so inexpensive to even carry a position now. I mean, it's silly to want to trade an ETF when you can trade the real future. Okay.
That's right. And by the way, the fear of futures is an irrational fear. Bubba's outlining why the risk level is really lower and the reward level is so much higher with these products. And yeah, you have to open different types of accounts, but risk reward, they're the place to be.
U.S. could grow more wheat. Well, again, they might try to grow more wheat, but again, you're still taking a big chunk out that becomes a problem. And feeder cattle.
Okay. And by the way, we might try to grow more wheat, but remember this, folks. Every quarter, there's 20 million more mouths to feed in this world. So the demand side of that equation is going up no matter what the hell happens. Every quarter. So at the turn of this century, there were 6 billion people. Now we're pushing up against 8 billion to feed. That's huge. And the U.S. wheat fields are not expanding.
Right. And feeder cattle, again, yes, corn was higher, so feeder cattle would normally be lower. But again, I believe that oil and feed and cattle in general go the opposite direction now. Okay, oil goes up, cattle goes down, because again, when people budget for their food and they have to decide on filling up their gas tank or eating, well, they're going to go to the next protein. I think that we're short feeders. Okay. And
by the way, we're going to come in, you're going to hear a lot about grilling season and all that kind of stuff. Seasonality is out the window this year.
So, for me, I mean, we're short, but I'd be a seller at 157, 158 here. And I don't want to really look to be a buyer, but to me, 152. Okay. And then fat cattle or live cattle. Okay. We're long that now. And again, we're up at the upper end of the range. But again, this is going to directly correlate to your budget, not yours necessarily, but people's budget. Because again, can you afford to fill up your tank and to buy steak at the grocery store? Because those prices are going up. Okay. They're not coming down. So those days are over. And what you get now is you get smaller portions for the same price as before. So I'd say 139 to 142. And hogs, which makes sense, right? This is the natural chain. As the gas or oil rises, hogs go higher. Why? Because that's the next protein in line.
That's right. It's the other white meat. It's actually got a little bit of health benefits over beef, and it's cheaper.
Okay. So again, and the deferred months are up much bigger. Okay. So when you look at it, you go, okay, well, that makes, again, it's logical sense. Okay. Now we are still, we're still in hogs, and we're long hogs now. But again, this is a market that looks fairly solid. This is great support level here. Okay. And the pivot's been around $100. Okay.
And also remember this about the meats. When they go, they go. Right, Bubba?
Hmm.
When they finally break, they break big.
They break
do
hard.
big, hard. So, again, here I see if we're trading around a buck, I see, maybe 95 on the downside. I see like 115 to 120 on the upside.
I agree. Maybe even the 138 from the PED virus.
Yeah.
Crude oil. Okay, crude. Look, we're short. This was painful. Okay, I was hoping it would reverse before this, but this was painful today. It went straight up for whatever reason. This now, I can look at this as a blow off pattern. Okay, as heavy volume on a straight up move. We'll see what it looks like. I will tell you this. I assure you, we'll be reversing tomorrow. Okay, I'm hoping we're reversing into a lower market, not in a market that's continuing to go higher. Okay, but I would say that 105 is pretty solid support here, if not higher. Okay, I think that you're going to see this again, probably make a run at 125 again. What do you think?
Again, listen, we always say it and we'll say it again. This market takes the stairs up and the elevator down. And the stairs lately have been much steeper. But if you look back on that down move, the elevator ride was brutal. So, this is just the way this thing trades. It's always traded this way and it will always trade this way.
Right. So
unless you get a real shock, Iran bombing Saudi oil fields, you're not going to get the kind of spikes on the upside that you get on the downside.
Right. Unless there's a fear.
And by the way, it's not out of the question that Iran doesn't bomb Saudi oil fields in this crazy environment. Really.
With Biden begging Mueller to give him oil. But again, if you look at the formula.
He's really good at he pisses everyone off.
Okay, here
it's a talent. It's a talent.
The active month is May, which is trading at 110, and we continue to go down. And you go out a year from now, you're at 90. Now, again, we think it's going higher. It doesn't really matter, but that's the overall pattern because commodities always trade on fear in the delivery month.
Yep.
So, in the meantime, 105 support, 125, but again, 115 should be some resistance. You might get some resistance right here, just based on the way it went up today. Natural gas a little bit higher and continues to, slowly grind its way higher. Okay, look.
At the last time we were at $5 in natural gas in March was in 2008, and that tells you everything. And by the way, if you look at where European natural gas, I don't know if you can get it, but the UK natural gas contract today,
it's in the 30s, I think, isn't it?
1,600.
Yeah.
The previous all-time high was 117. Okay. And that's going to affect natural gas in the US is a far more international commodity because of LNG. And that what's going on in Europe is big time, big time, big time.
And we're still long this again. Doesn't look great, but again, notice how it came right back down to our trend line and is starting
again, to move seasonality. You're coming into the injection season.
Right.
BS though.
Right. Coco and Joe. Okay. Oh, I'm sorry. Let me give you levels there, Kenny. I'm sorry. 460, $5. We're there, but 460 to $5 right now. Okay. Coco, look, at the end of the day, okay, these are thinly wild markets. Okay. And we do very well with these, but again, there's lots of big movements on both sides of the market. Okay. And right now, Coco, which we are short, okay, and is now holding a support level around 25. If it breaks below here, it's probably going to 24.
Right. And we have to remember in cocoa is the first soft commodity to roll. So once we get into April, which is, right around the corner, cocoa will be rolling. And that's when spikes in cocoa happen. So be on your guard in cocoa now because you could get some very big moves in the coming 2 weeks.
And you do. And again, I would say 24 to 26 in cocoa. Cotton, which we reversed this morning. Okay, fortunately, we bought when it was lower. In the meantime, it's going straight up again. This is getting a little bit too rambunctious. Okay, and again, expect either some pullback or some consolidation. Okay.
Also, last week we were talking about it like we're talking about corn.
Right.
We liked the action. We liked that it came down. We liked that it was holding. We said a big move was coming. We both said that the odds favor higher. It looks a lot. Corn looks a lot like cotton did last week.
Right. So you've got a spike up, which would suggest that I'm not telling you to trade this. This is too tough for the normal person to trade.
Very
But
illiquid.
if you invest in it or you look to buy it or you're hedging it, again, I expect much higher prices. However, I would be more surprised on a big break. I'd be more expecting maybe 126 to be the low and for this to consolidate before going to 150. Okay, an all-time high. Okay, so again, I think you just have to watch it. But again, the overall steepness of this move up is way too fast, which means that no matter what, there will be some either sideways or some action. But as I'm looking at it, 126, there is no top right now. So I can't even give you a
The
resistance.
one thing I will say about cotton, Bubba,
Yep.
is that, in the world of agriculturals, in the current environment, you can't eat cotton.
Well, you get cotton mouth though when you smoke too much weed.
Can't eat cotton. And
Sugar, and again, sugar we're long as well. And sugar is headed higher again. And again, you're seeing just a little bit too steep of a move. Again, remember, these are thin markets into thin markets into whatever the hell's going on. Crude oil in certain parts of the world, sugar is a component. There's a lot of things to think about here. We're long anyways. I would expect 19 support, 1960 some resistance. But would it surprise you if this went over 20, Andy?
no, I'd be surprised if it didn't go over 25.
Yeah.
I mean, it's got to get to 21st, but no, the answer is no.
No, I agree with you. I think, again, I think that this has lots of room to go.
Again, I go back to 2008 to 2012. Sugar went from 9 cents to 36 cents.
Right. And no, I mean, again, but what did your boss say? Why would I buy something I can get for free at the restaurant?
Right. That was when it was 2.4 cents. Everyone's bearish at 2.4 cents.
Can you how many packets you have to steal to get any money out of it? Anyways, OJ, again, came down hard. We were short. We ended up getting long. And now look at it. Now this is almost perfect. Okay. Maybe a tad steep. I would expect to see 150 as some resistance. And this is a pretty high price for OJ in general. Okay.
Especially at this time of the year. Again, seasonality doesn't matter. This is the kind of action we expect to see in November.
This is a higher price than you saw in Trading Places.
Right.
Anyways,
1981, a different world, huh?
144 to 150. Okay. Coffee, we are still short coffee. Again, you're getting a little bit of a pop off of, it looks like 212 might be some support. If we're going to stay short, which I don't know that for sure yet, but right about here should be about the end of the road if it's going to stay on the short side of the market. Okay. So again, I don't know that yet, and it's too close to call. But 225.
Again, we'll be there for the big move.
Oh yeah, we were there. We were there from 176 to 230.
Right.
Okay.
We'll be there for the big move.
And
of course, up a little in between. That's what happens.
And of course, lumber. Look, we don't trade it, but it's kind of been a big solid sideways pattern. What is lumber telling you about the overall economy? Anything?
I mean, lumber made the move already. Listen, the all-time high in lumber before 2018 was $494 a thousand square foot, a thousand board feet. This thing is a freak show. There's a lot going on there. By the way, Russia's a big timber producing country. Not that it affects our lumber price. Our price comes from Canada and here, but the bottom line is there's still a scramble on to buy new homes because they know that interest rates are going up. Wait until we get March CPI. Wait until we get that number. Then you're going to get a real scramble this spring because people are going to want to lock in. They're going to think 4.5% looks like a gift.
All right, we're going to stop part 1, and I'll stop the recording here, and we'll come back right in 2 seconds with part 2. Let me just stop the recording. Hold on. Boom. Yes. Thank you, darling. I appreciate it. And let's re-record the next part so you have it. Now, what's up, everybody? For those just tuning in, and I see a few coming in, what's up? And of course, we've been going for about an hour and 20 minutes already. But in the meantime, we got more to go. And of course, this is the actual Monday Night Call, which is Putin and Ukraine or Powell and rate hikes. I mean, and this is, where's Waldo? Where's Powell? Okay, he gave his story of a potential 7 rate hikes last week at a moment's notice, but yet the markets have soared ever since.
And by the way, today he said that he's not against 50 basis points in 1 month. So
And the markets came all the way back. Interestingly enough.
this is you're going to hear all kinds of garbage going on now.
And I could not help but put this in because this has been what I've been talking about for a long time. One of the biggest taxes, the one that's not even called a tax, inflation. When the government spends money that it creates, it's transferring part of the value of your money to themselves. Okay. Take that for what it's worth. But again, if you continue to let these guys get away with it, they will take everything that you have. Okay. This has been going on for how many years? 109 now. Okay. And they've made no progress. And I always like to say that the Model T started in 1913 too. And look at Ford now, and look at the Fed now. They're still on the same old models and still fleecing the public. Central banks around the globe. Okay. And of course, always thank you to our military. And unfortunately, I think we're going to need them more than ever now. We always need them, but I don't think this has a good ending, Andy. What do you think?
I got to hope for the best and expect the worst. How's that?
Yeah. I mean, but again, all of our
It doesn't feel good.
It's a tough job. Okay. All of you guys who do this, and there's many of you here, God bless you. Look, I can't say it enough. I can't thank you enough, because if you think if we didn't have you guys, think of the trouble we would have without you guys. So anyways, we always thank you and appreciate your service. Again, public servants, it's a thankless job that you do for us out of just dreams and desire or whatever. And we thank you. Okay. In the meantime, so what do you think the strike price is at the Powell put? Okay. It seems to me that they can't get it. There seems to be a certain point in the market that they always, the plunge protection team, whatever you want to call it, comes flying in. Okay. You got a strike price for that?
I do think that a lot of the market feels like there's intervention, but I don't think the ones who are pulling the chains are smart enough to know. I think that they just run in there and do a little bit of a market operation, and I think they're intervening in stocks like crazy.
Yeah, and I mean, I think it
feels that way to me.
And with thin markets, it's easy to do too.
Yeah.
Okay. So
they don't want it to get too out of control before the midterms.
It will. How serious is the Fed about inflation? Okay. Again, to me, I don't think they give a shit. That's what I think. Okay. Because they certainly have done nothing for years. I mean, we should have rate hikes for 10 years. Okay. This shouldn't be now. What are your thoughts?
Well, how serious are they? Assuming that inflation, and I'm lowballing it now, is at 10%, and I'm lowballing it.
You're about 80% off, but go ahead.
Right. They need to do 40, 25 basis point rate hikes, or 20, 50 basis point rate hikes before they go to equilibrium. So, they're not, the answer to that question is they are not serious at all.
Right. Agreed. Okay. Rule-based international order is unraveling much faster than expected. And you're watching it. You listen. Unfortunately, we're witnessing some really nasty times in history right now. Okay.
It's interesting. I will say, in early February, when the Olympics was starting, we talked about on the call how that handshake between Putin and Xi was a watershed event, in the world.
Right.
Just a month ago, right? A little over a month ago. We said that's a really important event. How there would have been no way I would have predicted that it would have gone this far down the road.
Unbelievable, isn't it?
Yeah.
I mean, but again, this is unraveling right in front of us, and it is scarier than all get up. Okay. Again, I don't want anybody to I don't want to make anybody afraid. I'm just telling you that this is, to me, very concerning to what we're watching, and it should be a concern. And they're doing a lot of things that are not to the best interest of Americans. Okay. Wholesale inflation surges 10% in February. So what does that really mean to us? Well, to me, it means that my prices at the retail end are going to go up 20%. What does it mean to you?
Exactly. Oh, that's exactly right. Because don't forget also, the taxes on this stuff are not a function. They're not like a nominal tax. They're a percentage on these goods. So it just, if you have I mean, just to keep things perfect, perfectly numerical, if you have a 10% tax, sales tax or whatever, and the price goes up 10%, the price went up 11%.
Right. What's up, Mr. Houston? I see you over there. What's going on? So
And that's
again,
the big problem in gasoline here.
oh,
That's the big problem.
oh boy.
California, $8 a gallon.
No, but President Biden will tell you that the gas companies are gouging. Not that the
No. First, he'll tell you that it's Putin's fault.
right. Well,
Then he'll tell you the gasoline
everything is Putin's fault, even though he wasn't involved before all this happened. But again, this is laughable. In the meantime, the words of wisdom from our friend Connie, who was not feeling well today, but was good enough to get me her stuff. And your life does not get better by chance; it gets better by change. Okay?
And that's right. And you know what? Take that one step further. This situation doesn't get better by chance; it gets better by change.
As always, Connie, you nailed it. And I hope you're feeling better. I don't even know if you're still here because I know you weren't doing well, but I hope you're feeling better. And of course, her State of the Union gives me a chuckle because this is another issue. Calling all mediocre males to sign up for women's sports. Live your dream by running theirs. Okay. Now, I don't know where anybody stands on this, but you want to be transgender, you want to be one or the other. Okay. But you should not be able to compete in the Olympics as a transgender athlete. Okay. You should not be able to compete in college sports as a transgender athlete. That's my opinion. And I'm sticking to it. And I don't really care what anybody says. What do you say?
Well, USA Today named the Woman of the Year. And their Woman of the Year was the doctor, the psychiatrist that Biden appointed, the transgender psychiatrist. So, hey, that's where we live in.
Yeah. Well, I don't want to live there. Okay.
You go in the metaverse.
Yeah.
You go in the straight section of the metaverse.
I can't eat in the metaverse. There's no food in the metaverse.
There's got to be a section, heterosexual, non-transgender section of the metaverse. They'll have
I'll be on a forced diet pretty soon. Anyways, and of course, I've been bitching for a long time, but I'm bitching again. This is really gets me. How long are Americans going to hide their heads in the sand, waiting for President Biden to act? Now, I'm sick and tired of this crap. Okay. I don't care who the president is, whoever it is, I'm sick and tired of what's going on in this country. Okay. I am so upset about this. I almost lost it today on RFD. And I can tell you this, I've never been beeped on any of my TV spots, which means, and my number one word in my vocabulary starts with F. Okay. I almost lost it because when are we going to wake up? That's all I want to know. When are Americans going to wake up? Okay. Are we going to wake up at the election? Okay. Are we going to wake up sooner? I mean, we could be helping prevent some of this stuff. And I think that unfortunately, it's going to lead to something far worse if we don't act sooner. What do you think, sir?
I agree. I listen, I think
Okay.
I think it goes back to the breakdown of the family. I think it goes back to the breakdown of the family in this country,
Agreed.
over the past decades. I think it started with that. I think that, listen, if you listen and you read what Putin and Z say about the United States now, we're all a bunch of pot smoking, godless. It's very interesting how it all changed with the, with the LGBTQ and all. They're using this to rally their own troops and their own.
And I'll put this. Somebody said Trudeau will arrest me. F Trudeau. How's that?
No, listen. There's a lot of problems here. The family breakdown was the big one that was the trigger, but it's just gotten so out of control now.
I agree with you.
And politically correct, that's another thing that really gets up my.
Oh, well, there you go. See, right? I mean, I seriously, I asked somebody that I was doing an interview with somebody, and I said, "What do I call you?" I don't know. I don't know the politically correct way to address you. But anyways, so in the meantime, the Yankee Michael, the Dow futures, which is what we use for a circuit for the Dow. Again, we reversed today to long. Okay. And, we didn't do much either way. We bought them lower, but again, they didn't go much. They were kind of under pressure, but once again, in came the late buying and it has broken out of consolidation towards the upside. Again, I'm not thrilled, but it is what it is. I would say, just over 35,000 will be probably some resistance, if not sooner. I think you might see some slow at 34.8. But in the meantime, since we're long, I'd have to be looked into be a buyer at about 34,000. So for right now, Kenny, 34 to 35 is a pretty good number to watch. But I'm not really a seller yet. I'm really only a buyer, with the exception of a blow-off trade. Okay. And the S&P, which we did not reverse, interesting enough, and the S&P now that it actually closed higher on the day after being much lower, and it looks very similar, but just not quite far enough to trigger. And interesting enough, we are along the SPY ETF, but not the futures yet. Now, will it reverse tomorrow? I don't know. I'll let you know, overnight as always. But the way I look at this chart, I would say 44,000 or 4,400 to 4,500, 4,400 to 4,500. Okay. And it's hard for me to believe that it will not reverse to the upside first. Okay. Even if it's going to go lower, because I think Andy and I agree that the next real big move in this market is going to be down. Okay. But it doesn't mean that we can't go up 10% from here or 12% before we go down 50. The NASDAQ, November, Quebec, which we're now long. And again, this broke out of the consolidation down here. And again, you can see that we're running. Again, I think it's probably running a little bit too quickly. I would not be surprised to see it go sideways. And today was a pretty good example of a pullback that held. And if you look at it, it actually held right where you might have expected it to hold. And again, I would suspect that until you get this type of action, more on that degree of change, that we're going to see some choppy action here for the next 2 days. And the Russell, which we've been long for a while, continues to be moving its way higher. But again, a little bit steep. This has been the overall problem with these markets, is that they're so light. The volumes are so light that the moves become exaggerated because of light volume. Because again, as a market maker, if you were a market maker and you're on the trading floor and you saw something going on that you didn't want to participate, you walked out of the pit. Okay. It left it with no buyers or no sellers, one or the other. Okay. And I think that's what you're kind of seeing here, is everybody kind of walks away and lets the buyers or sellers push until they run out of steam, and then they pop them on. So in the meantime, when I look at this, I'd say, well, 2040 should be some support. And here resistance now is up around 2155 or 2160. Okay. Again, this is a pretty key spot right where we're at. We close just below there, but again, it's still within range. So kind of watch here. But again, the volume is a scary thing. And that's why I would say, and of course, I'm warning you futures guys for tomorrow morning, that there's a 50-50 chance that I walk in, say hello, talk for a few minutes and say, hey, I'm not getting involved in this. It's too quiet. Okay. And of course, the VIX, look, we looked like it was going gangbusters, and suddenly, boom, right down back to support. Okay. And of course, the VXX, we stopped trading that temporarily. We did sell it at a very high price, though, which was a good thing, and it's collapsed since then, but we'll get there when we get to it. In the meantime, Apple, Alpha Papa Lima, which we reversed to long today. It came all the way down, and look at that 150, which is our what we talked about. And again, we were short going into that, but of course it zapped right back up again. And here we are running. 165 is a pretty key area, which is right where we're just above it. Okay. I would suspect that now, the next resistance area will probably be 170. Okay. But again, really, when I look at this, I can't get too excited about looking at it. But again, I have to go with where the price is taking it. And again, the volume is not as bad here as it is in the indexes. So, and it's a great company. There's a lot of good reasons to believe that it can go higher. If it fell apart, would it surprise me? No. I think that the overall view is that still much longer term it's headed lower. But again, it doesn't mean it can't pop. It doesn't mean it can't change. From now, I would look at 160 to 170 as my levels to watch. AG, Alpha Golf continues to push higher. Okay, we're long this as well. Okay, again, we're long this from 1030. Okay, it's now $14. Okay, it's pretty good. It's a pretty sizable move. And again, this is our way of playing silver. So even though silver's been very lackadaisical of course, Andy always says that what about the miners, Andy? What do you always say?
They outperform on the upside and underperform on the downside. That they do. I mean, that's just what it's like. Listen, this move is like silver moving from $21 to $29, you know? So
Right.
that, this shows you they underperform when the price comes down. They do worse, no question, on a percentage basis. But when the price goes up, you're picking and choosing your spots. That's what you want to own because you're going to make a bigger percentage gain.
Kenny, 14,000, 14,800.
And that's just nominally. I mean, if we're talking about futures, you're operating on margin. It's a totally different ball game.
Correct. Okay. Just like Connie, I forget to give you levels too. I try harder, but I forget. Okay. In the meantime, 1350 looks pretty solid as support. Okay. And again, look at, we went up a little bit too fast. Okay. And notice what's happening. It's going a little bit of sideways. Okay. Which is, again, is what you would expect. I wouldn't be surprised if this goes sideways until either it gets to 1402 or so, right, where's that right now? Or, 1390, somewhere around here, or it comes down a little bit, because again, this is where the trend should be. So we should be fairly stagnant until we get to this point, whatever date that's going to be. Okay. AMD, Alpha, Michael, Delta, which we are still short, which is obviously not a very good spot, as it came right down to a key support level. We thought it was going to break down below it, and certainly not. It popped right back up along with the markets. If you looked at last week's action, it was one of the biggest weeks we've had in years. Okay. From a very nasty down Monday to a week that was one of the biggest weeks we've seen in years. And what do you got in AMD? Well, right now we're so short. I don't know if we'll be there tomorrow, but I'd look at this at 110 support and 120 resistance. But again, look at 116. This is where it stopped today. Okay. That would be an area I'd be watching closely. Okay. But overall, big picture, 110 to 120. Baba, what a move this put on, Andy. What was this all about?
Yeah, I mean, it got oversold. Listen, I mean, this thing got down to the lowest price since 2009.
Right.
They pushed and pushed and pushed and pushed. It seems, it feels like someone really puked a long position there. That's
Charlie Munger.
That's what I mean. Would I be surprised? No,
that's what you said last week.
Right. It looked like a giant puke, and you know what happens after a giant puke? Big recovery.
A giant recovery, and now we'll see. In the meantime, okay, we reverse this along, and we'll watch it here. Look, I'm not a huge fan. Again,
you can't love this thing until it gets over 130, 130.
I'll always give you my opinion. Okay, of what I really think, but again, right now we're long, and it's 110, 100 to 110. Okay, but would it surprise him if this thing went back and filled that gap down at 80, 75? No, it would not surprise me. Okay, I don't know what the rally was all about, but in all the Chinese stocks, they all exploded on what was it, like last Wednesday, Thursday, and Friday? Okay.
Yeah.
So we'll see, what they're seeing. Okay, but in the meantime, we're long, and it's 110, 100 to 110. Okay, Bido, again, we have not traded this yet, but this is your way, okay, to trade currency. Okay, I mean the cryptocurrency, Bitcoin, if you choose. Okay, it's one of the ways. Now, Tradier is going to offer cryptocurrencies fairly shortly. There's a waiting list to be able to trade it, and of course, they'll eventually expand it out to everybody. Okay, but certainly, if you're interested, get on the waiting list, which I'll send out the link tonight. But also, if you don't want to get involved with the future, so to speak, or the hidden currency, well, here's an ETF that tracks it pretty reasonably. Okay, so you could certainly use this as a surrogate, and this is trading directly off of the futures. And what I'm trying to figure out before I do anything with it, I want to see how it reacts. And right now, there isn't even a lot of fluidity in the futures markets yet. Okay, basically, you can only basically trade one expiration to the next. There is not all those dates out, and even though they're really not there. They're not tradable yet.
Yeah, there's no, so what Bubba's saying is, look, compared to the dollar and other currencies, there's no bond market. There's no interest rate complex in these. And, for it to be a robust means of exchange, it needs that.
Exactly. So again, I would watch this. And again, this is a way to play it if you choose. Again, I'm not recommending one or the other. I do own it, and I am a believer. Okay. But if my Bitcoin and my cryptos went to zero tomorrow, it would be no worse than a bad weekend betting on the NCAA. Because it wasn't that bad. So in the meantime, until yesterday, BitQ, Bitcoin Soup, okay, which again, we don't carry these in our portfolios yet, but came down to some $14, now popped up to about $18. Again, this is just another way to play. This is multiples. This has got, I don't know, I think 30 or 50 different miners and other products in that are all related to Bitcoin. Okay.
It's good. I mean, I like this because it diversifies risk, management risk and various different things that are in there. So I kind of like this. It should go with it should just trend with the currencies. Sure.
I want my expert to give me the answer. Colonel, what do you think, Colonel? In the meantime, I would look at this, 15 to 17 or 18. Again, if you want to play the crypto world, you can just buy it. Okay. I'm not looking to, again, if you believe in crypto and you believe and you want to buy it, then I don't really care about the levels. Okay. This is a different animal because you're playing an outside market that you may be expecting. Some are calling for 100,000 Bitcoin. Some are calling for 200. Some are calling for 0. So, right? Is that? Yeah, I mean, I think what's his name, Lee from JP Morgan is still calling for 125,000.
Right. Yeah.
So I mean, smart guy.
So far they're all wrong. How's that?
100%. They're always wrong. But
they're all wrong.
But I'm just saying that you wouldn't be surprised if it went to 100,000.
No.
And you wouldn't be surprised if it went to 0, would you?
No.
Okay.
No.
In the meantime, if I look at
by the way, I'd be surprised if the whole asset class disappeared.
Yeah, no, I agree.
Listen, if there was a problem with Bitcoin and went to 0, okay, I could say, hey, I could see, listen, you can't legislate for everything that could go wrong.
Oh, look at this. Now, this is an interesting development. This is from my #1 expert in this field. Okay. Has stopped trading, not this, but Mara and Riot, and used to trade it every day, actively, no action. Okay, there's an interesting point. And this is what I've been talking about, the lack of activity. In the meantime,
it's in a coma. It's in a coma. Bitcoin's in a coma.
15 to 18 in BitQ. Chewy, Charlie Hotel.
Hey, maybe we should roll out a coin, Bitcoma.
Bitcoin, Charlie Hotel Whiskey Yankee. And of course, we're still short. It's got earnings coming shortly. I mean, again, it's a great company. I don't quite get what's going on with it. But again, it doesn't matter what I think of the company. What matters is what the market thinks of the stock. Okay. And right now it is trending lower and we're short.
They don't like this stock. They just don't like it.
$44 resistance. Okay. Probably 38 support. Okay. And coin, Jim Chanos.
To me, it says to me that the market thinks that, Amazon will eat their lunch. That's kind of what it is.
Will they eat their lunch or will they take them out for lunch?
Yeah, maybe take them out for lunch.
You know what I mean? I mean, certainly they'd be a great candidate to be taken over, especially since it's based on their company, wouldn't it?
I mean, I'd say that pet food is pretty recession proof.
Yeah. I mean, people are going to feed their pets probably sometimes more before their kids.
Right. And people are going to want more pets if we really have a bad economy because,
yeah.
Nothing that lifts you out of depression like a pet.
Listen, the one thing about a dog, they're always happy to see it.
Yeah.
Okay. Anyways, coin, which Jim Chanos says is a great short, and maybe he's right. But in the meantime, it's really just consolidating on the bottom end. We are in it. We are shorted. Okay. And we're with Jim Chanos right now, but we could change our mind.
Just remember, when Jim Chanos opens his mouth, his position is already firmly in place, probably for months.
Yeah, that's, they now have, right? Remember Greenmail?
Yeah.
Now they have electronic Greenmail and they're allowed to do it. Before they couldn't. Remember that?
Right.
Yeah. Anyways, Coinbase, which is the bookmaker for the currency world, which is they collect commissions 160 to 190. We are short. Okay, and it looks as a short right now. It looks beautiful. Now, I do own it, and I'm hedged it, but as a short, it looks beautiful right now. Curl F, which you don't cover, but again, you can see that they're just crapping on these things. They don't care. They're putting these guys out of business. DraftKings, Delta Kilo November Golf, okay, which we're still short, and it had a little bit of a pop, looked a little bit exciting, but it kind of paused once again. And again, we don't look at the news events, but you would certainly know that the activity has been wild for NCAAs.
I think that it kind of corresponded with the beginning of March Madness, this pop.
I mean, March Madness is bigger than the Super Bowl.
It is. I mean, I could tell you flying into Vegas last night. Planes are packed, and the
No,
ship
it's
was packed last week. It's busy
the hotels are all packed and they're packed
Yeah.
for 4 days. It's not around one event, it's every day.
every day.
In the meantime, we're so short, I would say 20 on the upside, and again, 15 on the downside.
I would say that, by the way, I would say bigger than New Year's and Christmas and all of the holidays and all of the other sporting events. March Madness is where Vegas makes its bread and butter.
Oh, I agree, 100%. There's no question about it. The action that is created there over 4 days,
Yeah.
okay, is unbelievable. And I understand that by Saturday, everyone's busted and exhausted.
Yeah.
Anyways, 15 to 20, a nice will own it. And again, 15 is my number where I won't sell it, but I'll stop adding to it. Facebook, Foxtrot, Bravo. Okay. And we remain short this and a little bit of a pop. Okay. Up to, 216, 220. Look, I would certainly be looking at probably 220, 200 to 220 would be the levels I'd be watching. Again, I think it's going lower.
In the metaverse, it's still at the highs because that's where Zuckerberg is.
Everybody hates him anyways.
I think that the best thing he could do for that company is to walk away and get another CEO.
Yeah.
That would be very smart. And by the way, he owns a lot of stock.
And it's funny, Xander, my son, who during the weekends, he's got a buddy in California, he's got a buddy in Florida, and they get on the FaceTime, and all three of them, now they're young guys, 27 years old, they all swore off social media.
Yeah.
Okay? Now, I'm not saying everybody does that, but interesting, okay, where they're at now, and that could be a sign.
Most of the people who are on Facebook now, Bubba, are people our age and for their grandchildren and things like that. That's what it is. I think a lot of it is now.
200 to 220, and I would think there's a greater chance it goes lower from here than it goes higher right now. First Solar, Foxtrot, Sierra, Lima, Romeo, which were long. Okay, and it's up hovering against again, same as look at the straight spike up. Okay, it has to resolve itself. Okay, so certainly sidewards action or a little bit of a pullback would not be no surprise. I would look at this from 75 to 80 right now. Okay, and I'm not a seller right now, but 80 should be some resistance. And of course, Andy's baby, GDX, Walt felt the X-ray. And again, it's just consolidating like gold.
Yeah.
Okay. And although we're short the future, we're so long the ETF. Okay. So again, to me, what do you think? 36 to 39 still, yes?
Yeah.
So again, it will, if gold takes off again, this will outperform percentage-wise on the way up. Okay. 36 to 39, Goldman Sachs, Gulf, Sierra, okay, which we're short. Okay. Look, at the end of the day, you're kind of mid-range between 350, okay, and 320. You've got earnings, not for a couple of weeks. I think April 14th or 15th. Well, 14th is the Thursday.
I don't care what
That's Good Friday. Good Friday is the 15th. What's that?
I don't care what the stock does. Those guys are going to make a fortune.
They always make a fortune.
Yeah.
Listen, they were the first ones to collect on the insurance policy from what the hell was that insurance
AIG.
company? AIG, right? They were the first ones to collect.
Yeah.
And maybe the only.
Yeah, they're smart. They're smart guys. They know what they're doing. And believe me, they're sitting on a bucket load of Russian credit default swaps. I can.
Oh yeah, 100%. I'd like to get some of those.
Yeah,
I would buy Russian
guarantee. By the way, and to hedge those, they're buying Russian debt at a tenth of a penny on the dollar.
I would buy it.
I know. So would I.
If I could get it, I'd buy it.
Right, but you can't buy it because it's not offered anywhere.
I understand. Listen,
only to Goldman Sachs.
I tried to buy the Russian ETF at $5. Okay.
And Goldman Sachs did a giant option in digital currencies today.
In the meantime, their earnings are either the 13th, 14th, or after Good Friday, because Good Friday is the 15th this year. Yeah, in the meantime, we're still short. 350, I'd sell. Okay, and to me, it's probably 320 would be the support side.
Right, and don't take what I'm saying, as gospel, because it's a high beta stock. It's going to move with the stock market.
Right. I mean, but they are the smartest in the room.
Right.
You're 100% correct there.
I mean, they're like GDX. They're going to outperform the stock market on the upside.
They're brilliant.
They'll probably go down with it on the downside.
They make bad trades like everybody else, but they run a printing press, And because their opinion is so big and counts, they can actually direct something to help themselves out of a problem.
And any company in the world that's worth their salt, that's going to do financing or an IPO or issue stock or do anything like that, is going through Goldman.
Right.
And do you know what the fees are on that stuff?
Huge.
They're enormous.
Right. IWM, India Whiskey Michael, we're still long. And again, it had too big of a spike up. It is at some resistance right here at about 207, 208. And I firmly expect it to consolidate or go sideways until it continues, if it's going to continue higher. I mean, this has been as miserable a stock as there's been for the last about 18 months. It's really been stuck between ranges. But again, if it's going to continue higher, this is the area, and it's got to come back a little bit if it wants to break through the ceiling, is, so to speak.
This also shows this index is a reflection of the U.S. government's, hell has no fury view of small business.
Right. They're putting them out of business. 198 to 208. Okay, Ken. And Mara, which my buddy stopped trading. Okay, and it is breaking out just a little bit out of that top end of the range. We've been watching the 25 level. Now we actually carry Mara, which we are long. Okay, and again, look, this is going to follow Bitcoin. But as my friend said, there's no more action. And this is kind of consistent with the market. The action has waned dramatically here. Now, someday it will pick up again, and someday it'll be busy. But again, this is just another potential way. If you're trying to get into the crypto world, that's why we cover this. That's why we carry it. Okay. But again, remember, it came from $6 or less when we first started watching it. Okay. And it went to 80. It's at 27 now. In the meantime, 26 support. And I suspect that 32 is the next real resistance. Okay. NEO, nice big move. Another Chinese EV. Again, overdone to the downside, got crippled, and suddenly it popped, and we actually reversed it now and are long it. Again, I don't put a lot into the Chinese stocks, but certainly I can see 1850 is support, 23 or 24 is resistance, and you get earnings in a couple of days. I think, is it the 24th? Keith, I know you're in it. Is it the 24th earnings for that?
Okay. I'm not sure.
Okay, like honey, feel better, Connie. Okay, I'm sorry.
Better.
I'm sorry you don't feel good. Okay, so again, 18 to 23 would be what I'm watching. I think they're the 24th, I believe.
Looks like it.
Nugget, November Uniform Golf Tango, again, acting much better than the physical metal itself. And again, we're kind of like 64 to 75. And we are actually still long it. And again, look, it looks great. Okay, it is doing exactly what you would expect after this giant move. And certainly, if you look at a 45-degree angle, there's either it can go sideways a little bit longer, okay, or it can come down before bouncing. But it should hold the bottom end as long as we continue in the uptrend. Okay, so 64 to 76 or 75. Okay. NVIDIA, November Victor Delta Alpha, okay, which we're long. And, again, we weren't long all the way up. We were short all the way down and just reversed. Again, it has popped very much like AMD. You think the chip stuff is over, or is it just getting started?
I'll tell you, there's a lot of nervousness in this chip world because of Taiwan Semiconductor. And I would hope that these US chip companies are really opening plants and getting, expanding their business, because, the eventual Chinese aggression against Taiwan is going to create the massive chip shortage. So this is the time where these companies need to be putting a lot of money into expansion.
Do you think they are?
I hope they are. I would think they're smart enough. They're not the government. I would think they're smart enough to know that.
Well, you could argue that the airlines aren't smart enough to hedge oil. So,
well, but the airlines are not producing oil, and that's true. But the chip making companies, they definitely have the wherewithal to make chips.
Yeah, 250 support, 270. But again, that may not hold. But again, remember, the speed at which you go up, okay, cannot be sustained. Doesn't mean it's not going much higher, but it means that there should be some break in the action, which doesn't mean it goes down. It means it could go sideways for a while. Okay. Penn, Papa Echo, November, which will remain short. Now, this is still performing a little bit better than DraftKings, and it's kind of found a little tight little range between 43 and 45, kind of dead center, kind of middle of the recent range. Remember, this thing was about $150 at one time. Okay. And I think that you were right, Andy. And I think this is I think all these little companies will be absorbed by bigger companies and by the Las Vegas. Las Vegas is going to have to open up pretty soon here because they're losing not a lot of business, but they're losing some business because people want all these special things they can get everywhere but Las Vegas. Okay.
Yeah.
And I think they're preparing for it. You already see a Win app and a Caesars app and some others. And I think that these companies will be absorbed into the major casino world because they've already got all the tech. They've already done all the work.
Yeah.
Okay. So in the meantime, we are still short, but looking at it here, I mean, it's 40 to 45, but in a very short here, it's 43 to 45.
Yeah, and they're laying back in the reeds. Let them collect all the names so we can buy
Right. Let them keep spending that acquisition costs and go bust, and they'll buy them out. Okay. The Qs, look, the Qs are, first of all, we're long. Okay. And they are trying to break out of this level. 350 is a key level to watch. I think you're probably looking at 340 to 350. Again, I'm not a huge fan. I'm long, but I'm not a huge fan of it. Okay. To me, this is consolidating, waiting for the next shoe to drop, but we'll see. Okay. In the meantime, 340 to 350. Okay. Or 330 to 350. Just watch the bottom end here. And Riot. Now, again, just like Mara. Now, it's still interesting enough. It was the first one to run, and it was well above Mara. Now it's behind it, but it is higher as well. Now, we don't trade this one, but to me, 18 is a level I'd like to buy it, or 22. Again, I will be frank with you. I don't naked short any of the crypto world. Okay. If I take a short position, it will obviously be covered up to a maximum because that world is as wacky as can be. And I'm never happy being naked short stuff like that. So I'd always be more cautious, but certainly I don't typically short $20 stocks anyways. So
how could you be short an asset that went from 5 cents to 70,000?
I'm saying, I agree. Listen, I'm with you 1,000%, right?
Even if it could go down, the risk is not, it don't make sense.
To me, these are just plays on, again, if you want to begin the crypto world, these are different ways to play it. 18 to 22, Roku, Romeo Oscar Kilo uniform, which we're still short. Now, interesting enough, remember I said 100 was the key. It held the 100 and now it's popped back up. And I think it's still now mid-range. I think it's 100 to 140. Okay. And we'll see what it does from here. Okay. Again, this looks tragic. It looks like it's going to collapse. Now, it may not. Okay. Again, I don't make those predictions. It just doesn't look very good to me. And the overall pattern looks pretty crappy. Okay, so I would suspect that it's going to continue working lower. In the meantime, 100 to 140. Okay, and if you think that's a big range, okay, I can tell you that the implied move just for the rest of this week is $10, plus or minus. So again, that's with 4 days to go. Square Dance, Sierra, Quebec, which were long. Again, look, this is much too steep of an up move. Okay, it stopped right where you might have expected it to, at about 140-ish. I would say that you're probably looking at 135 or 134 is the first support, but really, without doing much damage, you can go down to 130 or 125. Okay,
I mean, this thing was overdue for a bounce, Bubba.
Right, agreed. And it's a solid company. No matter what you think of Jack Dorsey, it's a solid company. But I would be looking at 120 to 140, and again, I think you can go through 140. But I think it just showed you that is a pretty key area. And based on the speed in which it went up, it would, to me, make sense that it slows here for a bit. The SPY, Sierra Papa Yankee, which we are also long. And again, the story is the same. Okay. They get too big, they get too steep. Right, now, this is my issue with these is the lack of interest, the lack of volume, the lack of decision making, which makes it even more problematic in the trading world. Okay. The position is a position. But in the trading world, this lack of activity is very frustrating because really what happens is the moves against you typically become bigger because normally they will come counter to what the actual trend is because people will walk away from it. And it's a very frustrating time when you lose volume on top of everything else. Okay. Now, again, we don't normally talk volume, but now it's becoming an issue. So it does need to be addressed. In the meantime, the speed is way too fast going up. I would say that you can see 450 on the top side. And I think 430 is the support level to be watching. Okay. And Tilray, which you don't cover, but again, it's a pot stock. But again, I think Andy was 1,000% right months ago when he said they're going to let these all bust out and they're going to let Altria and Constellation in. So again, there's nothing to see here, as they say. I don't think that at one point we took a gamble on them a couple of times. I don't even think they're worth the gamble anymore. Okay. I think that, again, if you miss it, you miss it. But I think the amount of money you'll lose trying to chase after a gamble trade is not worth it.
I also think that, this conflict now adds a problem to that business from a federal point of view. You got Russia and China saying a lot of stuff about how we're legalizing that stuff. Russia's holding a WNBA star who was arrested with a vape pipe with hashish oil in it. And they use that, they're using that against us. And that's another reason that the federal government's not going to kind of go any further with it. So I think that's bearish for these stocks.
Agreed. Tango, Quebec. Again, we don't carry this anymore in the portfolio, but based on the Qs, this is the Qs on steroids. It's had a nice big move from 40 to 50, which we thought could happen. Now you're watching, 53. I would say you've got a good chance to run, if we can run to 60. Okay. And I think you're probably looking at 45 to 60. Okay. Tesla, which out of nowhere, I don't trade anymore, but out of nowhere, again, remember I said I thought it was going to go down to the 720 level and test it. Well, guess what? It came to 760, held, and then it's gone straight back up again.
Yeah, I mean, Tesla's got a lot of problems in terms of sourcing materials. Aluminum,
I know.
Nickel, there's a cobalt. They got a lot of problems sourcing materials. So you got to be careful here.
And it's only going to get worse.
Oh, yeah.
Okay. So, look, I don't trade this anymore. We don't carry it. But if I'm looking at it, 840 to 940, probably, 950, somewhere around there. But again, I don't trade it, so I can't really comment directly.
I think Musk was crazy. Musk should have bought a nickel mine.
We should have done a lot of things, right? I mean, he may own one. We just don't know about it yet.
That's true.
The VXX, we stopped trading last week. Okay, on Tuesday, as I was trading live, this was going bonkers, and they kept halting trading. Okay, and it just turns out Barclays is who's behind this, had some issues, and I said, you know what? Let's just sell it and take our money and run. Okay, and we'll deal with it at another time, and when it becomes back to some more normalcy. So I don't know where everybody got out at, but I said when it was near around 38 to 40, just sell it. Just get out and let's start over. And it doesn't matter where you get out. The point is that now it's back down at 25. And I'm not ready to jump in because
Barclays doesn't have inventory, and that's why they're cutting this thing off. That's scary.
And this is what goes, see what happens in these products, like this leverage ETF. My fear is this, that one day you walk in, they stop trading, and then it opens up at zero. Okay. Because again, it can happen. And I don't need to be involved. When they gave me an opportunity to get out at a huge profit, especially when the markets were going up and the VIX, which is what this is supposed to represent, was going down, I'm taking it. Okay. And I'll wait for a better opportunity. And I'm not getting involved in this again until I get some more clarity on what they're going to do.
Right. I'm one of the few people, I read these disclosure documents on some of these things, and I have to tell you, all the chips are stacked against you because the administrator, remember, this is an ETN, not an ETF. So this is a note that also relies on Barclays credit on top of. So ETFs are different. They're just administrated. This is a product from Barclays. And these products, they have all the power. They can turn them off if they don't like the way they're acting. And it doesn't matter what you say. So you got to be careful.
Exactly. So again, I just chose discretion is the greater part of valor, as they say. And I say, you know what? We take our profit, we'll sit it out, and we'll wait and see what happens.
Right. And you want to, and by the way, You want to trade the VIX? You trade the VIX futures.
Right. And we're just out. We'll wait for it. Again, we get plenty of things to do. Okay. Win, Whiskey Yankee, November, which we're long now. And look, like all the other Chinese stocks, it went crazy. Now, this is obviously not a Chinese stock, but their business, them and Las Vegas Sands, a big percentage of their business comes out of Macau. Okay. Very big in China, right? So they naturally popped along with the Chinese stocks. Okay. Now, I happen to like Wynn. I think it's a great property despite China. Okay. So, but again, it got down to a level $66. I ain't seen that for years. Okay.
This stock is always going to move with China, just like Las Vegas Sands.
100%. Okay. So for now, I would say 75 is support, 82.50 on the upper end. And then again, it can go right through it too. I mean, this moves pretty quickly when it decides to move. XBI, okay, popped off of our bottom, right? We said watch 80. There's the pop back to 92. I would say 94 would be a great spot to maybe sell this. Okay. And again, it's probably 84 to 94 right now. And Zoom, which we no longer cover, but is we covered here, but we don't carry it anymore. It did get below 100 and it managed to come off the bottom. But to me, this is just a great spot to probably sell it again at 120 or so. I would look at this from 90 to 120. I think it's going back below 100. Okay. That's what I think. But again, I could be wrong. So I have no position in it. And I'm only giving you the levels, and I'm giving you my opinion here. I have no.
This is with the Chewy and the other pandemic stocks. It's grouped,
right. Mathematically, the VIX family of products must go to zero. That's true. Okay, that is correct. Is there liquidity in institutional markets with players trapped? Of course, there's players trapped. There's always players trapped. That's what creates the big moves in all markets. It doesn't matter how big they are. The bond market, everybody got trapped, okay? And they ran them up their ass. Okay, look, I don't care how much.
Also, don't forget, don't discount the sanctions and the billions and billions in oligarch assets that are frozen now and not playing in the markets.
You asked me to look at a 32-cent stock, brother. You know what I'm going to tell you about this. You want to gamble? Okay. I don't look at 32-cent stocks. Okay. You asked me about this an hour ago, right? Am I got the right symbol here? Okay. Let me see here. You asked me to look at this piece of crap. You want to gamble?
Boeing had a rough day today because of that plane crash in China.
Oh, that's terrible. Okay. If you want to gamble, go ahead. You have a good time. And don't get me wrong. I got plenty on my sheets that say NA next to it. Okay. But I don't look at 32-cent stocks. Come on. And if you got anything you want me to look at real quick, I will. Boeing. You want me to look at? Sure. Yeah. Richard, for you, my brother, the guy who I just entertain, he just watches me. Looks bad, but again, it's not the end of the world. I mean, look, I don't think. If you go into my opinion of the airline industry, I don't think the airline industry today will be what it ever was ever again.
Yeah, but Boeing has a little bit of defense contractor in it,
right?
And that you gotta like in this environment.
100%, but it's still $185 versus where it was. Now we know that they were a little bit overpriced and so on.
And by the way, there are better choices. I like Raytheon better. I like.
How about Lockheed Martin?
I like. What's the other one? NOC.
How about General Dynamics?
Yeah, General Dynamics and Northrop Grumman. Those are the big boys going to get the big contracts. But Boeing is going to benefit from this. Listen, who do you think is going to get what? Germany's going to start buying all this military hardware. They're going to be buying. They don't have. They're going to be buying it.
Okay. DFEN. Did you write it down wrong or did I read it wrong? It's very possible I read it wrong. Okay. This looks pretty good.
Yeah, I liked it. But it's again.
Daily direction. Oh, this is a short bull, 3 times bull on
leveraged, short-term instrument, not a long-term investment.
Andy will tell you can 10-day hold period in this stock unless it keeps going your way.
Listen, you get a positive news out of Ukraine, Russia. They seem like they're going to come to some kind of agreement. Things cool off a bit here. This thing tanks. So you gotta be careful with this.
It's no problem. You don't have to apologize. I would almost going to buy that for 32 cents. Anyways, look, you're playing with fire here. Don't get me wrong. It looks great. Okay. And if the issues continue, it can continue to go much higher. But remember, be alert that this could overnight open down 20%, 30%. Okay. Because again, it works up of a multiplier. It's 3 times. Number one. Number two, if there's good news out of Russia, okay, it's probably going to happen overnight when the market isn't open. You're not going to be able to react to it.
And unfortunately, if you're buying this and you're sitting long this, the best case scenario for this is actually if the Russians take over in Kiev, so
Right.
It's kind of an ugly bet,
In the meantime, it looks really good, but as we say, if you're just playing this, no more than the 10-day holding period. But again, I think in this one, you're gambling for a potential big winner, but you're also gambling for a potential big loser because you'll have no defense if it gets creamed overnight.
And that's where, and Bub is 100% right, because the news comes out of there while the U.S. stock market is closed.
Correct. So again, remember in these conditions, okay, you should not be doing a lot of active trading. Okay. You can be right and still be wrong. Okay. So this is a market of patience and waiting. We need more action. We need more volume in this market. We always need more volatility, but we need more volume now. And I know, like I said, I never talk about volume. Have we ever talked about volume before? I don't think so. Okay.
We rarely do. We bring it up once in a while, but rarely.
This is a time that we need some more action. Otherwise, just sit tight.
Actually, we usually talk about it, Bubba, around the holidays, around in December.
Right. And when it's not going to be there. This is a time to sit tight and not get too aggressive. You cannot come out ahead by being aggressive in this market. Okay. You can only put yourself in major peril. Okay. So to all of you, and Andy, thank you, brother. Glad you got back safely. And to all of you, have a great week. Just be careful. Look, I'm telling you, you're better off. There'll be better times and better opportunities to be active. This is not one of them. Okay. And I assure you that you will find yourself much happier when you're not, as they say in Yiddish, broigus about making bad trades because you're trading in a market that you shouldn't be trading in. Okay. Have a great week, everybody. As always, thank you. Thanks, Andy. I'll talk to you guys later.
Okay, bye.